This is still a very, very strong and too strong labor market. So we need to see that slow.
We do expect a slowdown in the economy, and I think that that's needed. That's what the Fed wants.
There's nothing that's going to stop them from continuing this march of 50 basis point increases.
They really cannot right now, I think, suggest that they're going to slow. They really need that clear and convincing sign.
Recession probabilities rose the moment the Fed started talking about hiking.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Equity futures up 1% on the S&P. TK, what a week we've got coming up.
We've got a huge week coming up, and then 2 weeks in, we've got the Fed meeting as well, but ECB really front and center. And John, what's interesting, after a jobs day, the Monday after is sort of clumsy and dorky. That's the way it is. But to me, the headline today is the jump condition in copper, the optimism of China reopening.
As China reopens and equities push higher, Tom, we push forward to CPI on Friday. Michael Harnett over at Bank of America writing this morning. The summer of Volcker, no fun until the Fed is done.
It's going to be data dependent, and we're going to have to see. I mean, with an 8.3% statistic, what if we overshoot that? What if we come in underneath? And the research notes over the weekend, Bruce Kasman will join us here in a bit with JP Morgan, is an ambivalence. It's like we just have to wait. What do you think, John? You wait till you get past the Fed meeting.
As we wait, we're starting to see those price targets come in just a little bit more. Bramo, we'll catch up with Laurie Calvasina of RBC in a couple of minutes' time.
Pretty much across the board, the Wall Street notes seem to come out and say perhaps we've had peak pessimism, perhaps we're a little bit past that, and now we've got to assess what a growth slowdown looks like. The idea of Mike Wilson of Morgan Stanley saying that in the second quarter earnings, we'll probably see companies start to remove some of the fuzzy forecasts and actually downgrade even further what their profits are likely to be, and that will lead to the next leg lower. But this is not a wholesale freakout or a wholesale bearishness that we saw perhaps a couple of weeks ago.
Do you want some good news?
Sure.
Quiet period for the Fed. It started.
I knew you would say that.
No Fed speak this week. Isn't that good news?
Does it really matter? Honestly, I do wonder. I was driving this weekend, and I saw that it cost about $100 to fill up your gas tank, somewhere between $70 to $100 to fill up your gas tank. And this is going to have a material effect regardless of what the Fed does, right? Inflation has a real downward shift to growth even without the Fed. So how much does the Fed speak really make a difference at a certain point?
John, this is not a small point on sort of a nudgy Monday in June. The second derivative of the gallon of gas is what we call convex, which means it has an accelerative force higher right now.
And it's pushing high, Tom. And we talked about JP Morgan repeatedly talking up $6 a gallon on average for this country by the end of the summer. That's brutal. TK, do you want to touch on British politics?
Oh, we've got to. So much for the Jubilee afterglow. I mean, John, translate. Oh, we got to help our American viewers and listeners getting up. He's not going to get tossed out today, right?
This is what's happened, Tom. The letters go in from Conservative MPs. Once you get to a certain threshold, it triggers a confidence vote.
Yeah.
Most people assume that the Prime Minister can win that vote a little bit later this afternoon. But even if he does, Tom, and perhaps he doesn't, but even if he does, he's under pressure to make a move in a big way, Tom.
Make a move in what way? I mean, come on, John.
To resign.
In America, any Republican or Democrat is going to have 15% of their party that thinks they're doing a lousy job.
Yes.
We don't have confident votes.
But
what's a so what here?
There's a difference between the parliamentary system, Tom, and the presidential system here in America. In the UK, you are elected by your party to be the leader. It is up to the Conservative MPs. They've made their voice pretty loud over the last few weeks, Tom, that some people are upset about this. And those letters, I think, capture that story. To compare the two systems, let's not do that again. It's pointless.
Let's not do that again. John, is this about the seating arrangement at the House Guards when they were like the horses?
No, I think it's about that so-called Partygate,
this
Tom.
thing, they're all doing this.
I mean, you're the guy that wants to talk about this, not me. This is not on the market radar at all.
It wasn't the seating arrangement at St. Paul's.
I don't even think it's on the market radar in the UK either, Tom. Okay. It certainly wasn't the seating arrangement at St. Paul's. We're done with this, aren't we? I knew this wouldn't be value add, so why bother?
Futures on the S&P. We're on the edge of Downton Abbey, is what I know.
On the Nasdaq 100, up by
1.4%.
I'm told Lizzie Burden will catch up with us a little bit later, and maybe we can make some sense of this whole thing. Yields higher by 2 or 3 basis points,
nice
296.25 on a US 10-year. In the commodity market, up 0.8% on WTI. Bramo 119.81.
All right, today is a pretty quiet day when you look at the events ahead of what we expect later this week with respect to the ECB, as well as the latest inflation data. I do find it interesting that Congress is going to be returning after their prolonged Memorial Day recess. A lot on their plate, especially with some of those shootings that have been reported over the weekend and the issues, the pressures around gun control laws. I'm focused, though, on gas. How do they respond to the idea that we're seeing gas prices, on average, reach upwards of $4.80 in the United States? At what point can they engage in additional actions, especially as the White House has basically said we don't have that many more options? We also have the UK Prime Minister Boris Johnson, as we were just talking about, facing a no-confidence vote as the leader of the Conservative Party. I'm not going to try to add sense to this. I think that we just got enough of trying to add sense to this from people who don't know that much. John can add to this, as well as Lizzie Burden of Bloomberg News and Bloomberg Television. And at 1 p.m., we get the keynote presentation at Apple's Worldwide Developers Conference. This is interesting to me, especially after Apple shares have been down more than 17% so far year to date. What can they do in terms of new technology, in terms of getting people excited about a new iPad or some additional aspects of their business to really drive sales going forward? How much growth have we already baked in, and how much can they really regain with innovation, John?
Bramo, thank you. Let's get to Laurie Cavacina, the head of US equity strategy at RBC Capital Markets. Laurie, a little bit of a trim to your price target. Let's call it a trim. 4,700 from 4,860. Just walk me through your thinking over the weekend into this week.
Sure. You know, John, I think we've all had the question on our minds, are we headed into a recession or not? And I will tell you that we have 11 different models that we look at, but a fundamental assumption behind all of our modeling is the idea that we're going to see a material slowdown in economic growth that skirt the recession. And so when we do that, we've basically updated our GDP models. We've added in a new valuation test, which was really responsible for a lot of the downgrade to the forecast. But in general, we think that the economic data we're taking the optimistic case here that the Fed will be able to pull this off. But we do think that bond yields essentially have taken a bite out of some of the forward return to the market. We talked about that actually in April. That continues to be the case today. And, Lisa mentioned peak bearishness coming on. That's something else we're modeling in. So we basically look at the recovery off of the low that we had on May 19th and factor in the typical recovery that we see in growth scares. And it's about a 25% type return. AAII, that net bearishness that we've seen there, also tends to give you a bit of a springboard. So while we are factoring in this economic ratcheting down, we do want to take account of the fact that sentiment probably has hit peak bearishness as well.
Laurie, I want to take an individual sell-side report. I know you don't want to talk about individual stocks, and I'm not going to ask you about Amazon, but Ron Josie over at Citigroup publishes on Amazon with a stunning view out 1, 2, 3, 4 years. The EBITDA growth from pre-pandemic is $43 billion out to a present $71 billion, out to a window in 24 months of $104 billion. I believe that's growth. You are pounding the table that growth does better as value fades. Discuss that.
So look, I think we also need to just take that economic environment we think we're in and apply it to sector and style positioning. And typically we see that when you exit a hot economy to a cool economy, one that's above growth to below growth, or above average to below average in terms of the trend itself, you typically see value cede leadership. Value does well in a hot economy, and you tend to see growth outperform in that cooler economy. Now, defensives would do well in the recession, but we think that's, a risk, but not our base case. And when we look at growth as well versus value, we find that basically the relative valuation multiples are all starting to look reasonable or slightly attractive again. And if you look at the long-term growth expectation between value and growth, it had been sliding. So growth was really coming down relative to value. That tends to drive the relative PE multiple. But we have actually started to see some stability in that relative long-term growth expectation. In other words, investors have not given up on the idea that growth is better than value on the growth front, and that should give some support to the PE multiples here.
So, Laurie, what's going to drive the S&P? What's the leadership going to be to get it to 4,700, which is your new target?
So look, we like technology, and I want to stress that we are being very particular and very picky on that broader TIMT trade. So we don't like the communication services sector. We're neutral on consumer discretionary, but we like that classic tech sector where the valuations have gone from being ridiculously overvalued to slightly attractive to neutral, depending on what day we update the model. Earnings revision trends are actually starting to improve for the technology sector again, and it's one of the biggest sources of net income in the S&P as well as market cap. So we think that helps stabilize the market. And if we do have a peak in bond yields here, which is a call our rate strategy team is making, that should also help the tech sector stabilize in terms of performance. On the value side, Lisa, I would tell you look at financials. We've got a much better valuation case than what we've got in energy or materials right now. Earnings revisions are positive, but they're not peak-like, which I think they may be starting to look like they are in energy. And we really think that as the market sort of transitions away from the recession fear narrative and towards the slower growth narrative, that can breathe a little bit of life into this financials trade again in terms of a relief.
Laurie, wonderful to get your thoughts as you cut that price target just a little bit. Laurie Calvasina there of RBC. Some people out there still bullish. JP Morgan, one of them. Morgan Stanley, certainly not bullish. Pretty bearish, Tom. Mike Wilson coming into this week saying that we could go down to 3,400. He said that before.
Yes.
The bear market rally that began a few weeks ago can continue for a few more weeks until the Fed makes it crystal clear they remain hawkish and earnings revisions fall well into negative territory. He's looking for that 3,400 number by mid to late August.
Get out the calendar, and again, ECB Fed is what's definitive in June. But John, I love the idea here that people, and you've been very good on this, the calendar is sped up where we're doing mid-year reviews the first week of June, second week of June. I like what Goldman said in that there's a narrow what-if path. I like that, in that there's a range of views, right? And the media loves that and all that. But in the middle is a narrow path of how we, to use the cliche, thread the needle through 2022.
A narrow landing strip for a soft landing over at Goldman. Tom, that's the hope. That's the hope.
Yeah.
We all share that hope.
I mean, to me, the uncertainties are so great, and I'm going to look at the Bloomberg, look at the terminal, and what I see is a jump condition in copper.
Equities picking up, that's what I see. Up by more than 1% on the S&P 500. Yields a little bit higher by 2 or 3 basis points, 295.89. Looking ahead to this week, CPI on Friday, an ECB decision this coming Thursday. A very interesting week ahead. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, rebel members of Parliament from Prime Minister Boris Johnson's Conservative Party have forced a confidence vote today that follows a series of scandals. Opponents will need a majority of 359 Conservative lawmakers to force Johnson from office. Uncertainty over his future comes as Britain's face soaring energy bills and the highest inflation in 4 decades. Saudi Arabia is signaling confidence in demand for oil. The kingdom has raised prices more than expected for Asian customers. Oil has rallied almost 60% this year. Rebounding demand from countries recovering from the pandemic coincided with a tightening market after the invasion of Ukraine. And life in Beijing is taking another step towards returning to normal. The city is rolling back coronavirus restrictions after declaring the latest outbreak was under control. Public transport will resume in most parts of the city. Restaurants will resume dine-in service, and movie theaters will reopen with limited capacity. North Korea has now set a record for the most rocket launches in a single year under Kim Jong-un. 8 short-range ballistic missiles were fired on Sunday. North Korea has launched 31 missiles so far in 2022. There's speculation that Kim may be preparing for his first test of a nuclear device since 2017. And U.S. senators say talks on limited gun control measures are moving forward slowly, but a deal is far from assured. Republican Pat Toomey says it feels the Senate is closer than it's ever been since he's been in office. Democrat Chris Murphy says one focus is identifying 18 to 21-year-olds that could be a danger and prevent them from acquiring guns. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
price of gasoline is not set by a dial in the Oval Office. And when an oil company is deciding hour by hour how much to charge you for a gallon of gas, they're not calling the administration to ask what they should do. They're doing it based on their goal of maximizing their profits.
That's the view of Pete Buttigieg, the U.S. Secretary of Transportation, on ABC over the weekend. From New York City this morning, good morning. Your equity market shaping up as follows on the S&P. We're positive more than 1%. On the NASDAQ 100, up by 1.35%. It's a nice move, Tom. In the FX market, euro dollar 107.44. Bank of America looking for 2 half-point ECB hikes in 2022. That's 2 50 basis point hikes in 22. The expectations for the ECB this week, Tom, sky high, going into Thursday and beyond.
Okay, let's stop the show. This is really important. I mean, what are we going to see in Frankfurt actually on Thursday? We don't cover this like we cover the Fed, but is it a normal thing where they're going to come out with some kind of an announcement and it's going to be a normal press conference, or is it going to be a snooze fest, or is it all hell breaks loose like at Bank of England 6 weeks ago?
It's setting the runway, the guidance, the path forward for the summer. That's what most people assume this meeting is this Thursday. Just setting us up for what they're about to do later this summer. You've got the hawks who are pushing for 50 basis point moves. Bank of America think they go there. Others say they go at 25. And overwhelmingly consensus, Lisa, right now is 25 later this summer a couple of times, and you get back to zero pretty quickly.
People agree that the ECB is far behind the curve, but not as far behind the curve as the Federal Reserve. I can't imagine, though, raising 250 basis point times. I mean, the idea of a 100 basis point rate hike in 2 meetings, it's hard to wrap my head around that given the negative yielding from the ECB.
That hasn't hiked since forever.
Or we still have negative yielding bonds. There you go.
Been negative since 2014. Anyway, we need to talk about Washington.
Yes, we do.
I'm trying to reconcile what they're saying on the international stage, Tom, with what's happening at home, and they're reassessing their international view because of domestic pressure. Perfect example is China. You had Gina Raimondo, the Commerce Secretary, over the weekend speaking to CNN. She said this, Tom: steel and aluminum, we've decided to keep some of the tariffs because we need to protect American workers. There are other products, household goods, bicycles, it might make sense. I know the president is looking at that. On the same weekend, we had this from the State Department. The Secretary of State said this: China continues its genocide and repression of predominantly Muslim Uyghurs and other religious minority groups. Tom, that is a super uncomfortable position for the White House to be in, to be talking about removing some tariffs and at the same time be talking about a country that's conducting genocide.
And the oddity here for our international audience, and John, correct me if I'm wrong, Lisa, jump in, this is flat out the only bipartisan agreement in Washington. That's really what's going on here.
Oh, Bramo, without a doubt, on China and having an aggressive stance towards China, pulling back those tariffs. It's going to be interesting to see how that one develops.
Politically, it is a very bipartisan issue. But if you look at the business side, and frankly, if you look at the fact that people are complaining about inflation, perhaps it's a little bit more nuanced, right? I mean, we have companies that are coming out and taking a much softer tone with China, continuing to expand in China, not necessarily withdrawing as quickly as people would expect. And you have people who are very worried about the price of goods. So you put these two things together and suddenly they're between a rock and a hard place. You're seeing this with gas prices as well as some of the policies toward Iraq, Iran, and Saudi Arabia.
Big time. This conversation, Tom, makes the UK picture feel pretty tame.
It's pretty tame is the way to put it. She's packed all her hats away after the Jubilee for 72 hours straight. Lizzie Burton joins us at 10 Downing Street right now on the Johnson Follies. The distinction that I see, Lizzie, is very simple. And this is, I think, from the Telegraph, it may be from the Times. Theresa May had an actual cadre, a clique that was against her. This seems to be very diffuse, very disparate across the Conservative Party.
And that's what's scary for the Conservatives. They don't actually know how far above the 54 threshold of letters it took to the chairman of the 1922 Committee of Conservative Backbenchers to trigger this vote. It could be much higher, and there could be a much bigger level of discord within the party, but that's what will be measured today, although it is a secret ballot. So we'll get the vote between 6 and 8 p.m. today. It doesn't automatically mean that Johnson will go. Of course, you have to have the 180 votes to oust him. Theresa May lasted, Margaret Thatcher lasted, but in both cases it weakened their authority and they did eventually go. So this could spell the beginning of the end for Boris Johnson.
Lizzie.
The hope will be, though, that this vote reunites the party, and that, but what he could do is call a quick general election, and in that case, that's when the markets are going to care about this.
Lizzie, are there any policy implications to the point that you were just making of when markets will actually care? What's the policy ramification of a win or a loss of a no confidence vote here?
Well, this underscores how badly the Conservatives have handled the cost of living crisis, and that is what the markets care about. The markets care that the Bank of England is having to step in again and again in the second half of this year when it was expected to pause the hiking cycle. But because Rishi Sunak, the Chancellor, didn't get in control of inflation in March, that is why he is no longer really seen as a prime runner and rider to replace Boris Johnson if he goes.
Lizzie, wonderful to get your thoughts on the situation. Lizzie Burden there. We'll catch up with you in the next couple of hours as well. Looking ahead to a vote a little bit later this afternoon. As Lizzie pointed out, Lisa, at the moment, this isn't going to be on the radar of this market until and if there is an election that changes the fiscal future of the UK.
And right now, it's very much more the Bank of England next week and what's going on with the Euro region and inflation. But right now, this isn't on the radar because the reality of what people are paying is that much more present. And that's the case in the United States as well. And that's why I think that when you talk about blurring of the lines of policy and what the political popularity is come into play, all of a sudden inflation takes center stage. And how much does that overwhelm and upset some of the talking points of both parties?
Sometimes you don't care about politics, Tom. You just care about the bill at the end of the month. And for some people, they're just sitting there thinking, I don't care who runs the country. I want my bill to be lower. Prices down.
We don't do calculus on Monday, John, but it's real simple. There is an acceleration in the price trends of inflation right now. That's really important math. And what that means is the rapidity, the rate of change here into June is breathtaking. That goes Friday, John. It's critical on CPI. Can you imagine if we do in Italy or Germany and surprise to the upside?
8.3%, the median estimate, in line with the previous read. Nomura's at 8.5. Morgan Stanley is at 8.5. BNP's at 8.4. HSBC at 8.4. Wells Fargo at 8.4. There's some names out there, Lisa, at north of 8.3, 8.4, 8.5.
And the composition of the inflation has been shifting. And this has been an underplayed reality that we saw come through with retailer earnings. They can't adjust quickly enough to what people are buying and when. And you can see certain discretionary items around the margins being cut back on because consumers have so many fixed costs and still want to get out and do things post-COVID. It is such a complicated picture for these corporations.
Awesome lineup this week. Through this morning as well, Bruce Kasman of JP Morgan is going to be joining us shortly. Going into that conversation, futures nicely positive, up more than 1% on the S&P, on the Nasdaq up by 1.4. Yields higher by a couple of basis points, 295.52. And look out 120 on WTI, 119.64. Crude higher by 6 or 0.7%. Heard on radio, seen on TV for our audience worldwide. This is Bloomberg. There's one thing that used to drive me nuts. There's many things, but here's one. Good news is bad news. That was Friday, wasn't it? How frustrating is that for so many people that good news in a payrolls report is seen as bad news for this market? Yesterday, into the weekend, on Friday rather, where am I? On Friday, going into the close. I'll get there, Bramo, don't worry, give me a second, I'll wake up soon. On Friday, going into the close, that was the story. Good news is bad news. We traded much, much lower and we erased a weekly gain. A weekly loss now on the S&P coming into this week. We start things in the right way for the equity bulls this morning. Equity futures up by a little more than 1% on the S&P. On the Nasdaq 100 up by 1.4%. Into the bond market, this is the connection. Equities down, yields up by almost 20 basis points last week on a 10-year. 295.52. Yields higher again this morning by 2 basis points. Michael Harnett over at Bank of America saying no fun until the Fed is done. When will the Fed be done? Hartnett suggests a negative payrolls print later this year. Rick Reeder of BlackRock. I had to stop in my tracks on Friday, Tom, when I spoke to him. Rick Reeder of BlackRock talked up the prospect of exactly that. He said that Friday's payrolls report, it's the last solid one. There is a negative print in our future.
Don't get me going, John. I am worn out by all the pontification about recession. Paul Samuelson Paul Samuelson, the laureate, his 48 textbook, started modern economics. He said, I got to paraphrase it, they've called 9 out of the last 5 recessions. We got a fever going right now. Somebody will be right, John, but it's out of control.
Ramo, your take?
There is a difference between a recession and a slowdown and some sort of halt to what we've seen in terms of the momentum. And the partition, to use your word, Tom, between the two is very fuzzy. How do you price in a slowdown and not a recession? Where is the line? Because you're right, it doesn't look likely that we're going to get a recession, at least in the next few months.
That was diplomatic. At least you know what day it is.
We're on speaking terms on a Monday.
Let's get to Europe. Euro dollar and the German 10-year. Pushing 130, came really close to that on a German 10-year this morning. Right now, 128, yields up by just a little bit. Euro dollar 107.38, up a couple of tenths of 1% there on euro dollar. And just some big calls on this ECB going through this summer. The Bank of America tool, Tom, 250 basis point hikes from an ECB that hasn't hiked since 2011 and has been in negative territory since 2014. That's a big call.
Yeah, it is. I mean, it's a big, big call, John. But, you know, what is the consensus here? 25 beeps?
Not at this meeting, Tom. We lay the groundwork for a move of 25 basis points at the meeting after.
Okay, well, we'll have to see. Right now, we are thrilled to bring you Bruce Kasman, chief economist and head of global economic research at J.P. Morgan, listening all weekend to Ario Speedwagon because Kasman and team have been riding the storm out. There's no the hurricane. Come on, you guys were diplomatic in your Friday weekly prospects. You pushed against the CEO who's looking for a hurricane. If it's not a hurricane, Bruce, brief Mr. Diamond right now on what's ahead.
Well, I think what we have here is a pretty powerful tension between drags that are not going away and a very resilient private sector with the health of both households and corporates being quite remarkable right now. I think what we're going to see is growth continue to be on the softer side, but growth continue to show resilience. We don't see a near-term recession. We see a global economy which actually does okay in the second half of the year with the U.S. slowing and the rest of the world doing somewhat better.
What does China do to the U.S.? You call it the audacity of hope. I agree. We have a jump condition in copper this morning, but link in all of your Asia research over to what's happening in the United States.
Well, I think the U.S. manufacturing sector mostly is going to see some softening as a result of what's been happening in China. I think in addition to that, there is every reason to think that higher interest rates, higher energy prices is going to hurt things like the auto sector. We can see that. And we've just been through a really good run for U.S. and global manufacturing on the back of inventory dynamics. So I think industry is going to slow. You know, our basic point is there's no real reason to be worried about a recession. There is some slowing in the picture. But the other thing is that part of the reason we're getting slowing is high inflation. And I think the combination of high inflation and tight labor markets is starting to change the inflation process, which over time is not good for the sustainability of this expansion. So I'm not trying to downplay the underlying dynamics here, which are worrisome, but not about near-term recession risk. I think you'd have to get hit by much bigger shocks to really talk about recession anytime in the next 12 months or so.
Bruce, to one of John's pet peeves that he mentioned this morning, the good news is bad news that we experienced on Friday, that momentum in a labor market highlights how much the Fed has to do. Is that your takeaway from the recent data, that there is nothing to stop the Fed from being more aggressive than the market is currently pricing in?
I think over time that's true. I think the Fed is committed to 250s. If we're right and the economy is slowing towards a 2% pace later this year, there's a good chance they slow the pace down. But ultimately, I don't think what you see in market pricing is going to be consistent with the Fed getting control on inflation, slowing the economy down to something that's going to be weak. And I think ultimately the Fed's going to have to do more. But I don't think the Fed is ready or signaling it's willing to do that much more, I think, in the near term. And I think that's important. The Fed does not want to create a recession right now. The Fed is tolerant of inflation above 2%. So this is going to take time before we get to the point where the Fed really has to hurt us.
So, Bruce, when I was reading a lot of the notes over the weekend, there seems to be this distinction drawn between a slowdown and a recession. Is there really some sort of clear-cut distinction here? Or are we basically just parsing words around the same issue, which is how do you price in a loss of momentum?
I think there's a huge difference between a slowdown and a recession. We haven't had a recession in the U.S. without the U.S. unemployment rate rising 2 percentage points or more. Recessions are nonlinear events where corporates are pulling back. So I think we should be careful when we use those terms to make sure we understand that that's what it means. There are a number of different ways the economy can slow. I think it is likely the U.S. economy slow. I don't think it's likely that we're going to see that kind of break that we've seen that's been notable in recession dynamics.
Bruce, one of the big distinctions of J.P. Morgan is how you parse it out among your team. I know you hang on every word that Daniel Silver writes. And this weekend he writes about high wage growth. This is a really important concept, and that the new domestic labor economy is skewing again to high wage job growth. Discuss that.
Well, as the pandemic got hit and we saw dislocations in the economy, an important part of the wage gains we were seeing and the elevated wage gains were not tied to the tightness of the labor market. They were tied to the dislocations, and they were unusually skewed towards lower skill job sectors. And now we're seeing, I think, what's more consistent with the tight labor market, wage pressures building, and wage pressures building in particular in sectors of the economy that are high wages. I think the problem the economy has, even as it slows, is that the labor market tightness, the salience of inflation, is starting to affect the wage and price setting process. And I think that's the issue around the sustainability of the expansion that ultimately is going to be a serious problem.
How long can the consumer remain resilient if you don't get wage gains commensurate with inflation, and if you see people eating down into their savings as we have?
Well, first of all, we should realize we are getting wage gains commensurate with inflation. The wage bill, wages and hours together, have been growing at about a 9% pace over the last 6 months or so. So we have been getting that. I think we are going to see slowing in wage income, partly because the economy is slowing. I do think the U.S. household sector has every ability to continue to absorb drags from higher inflation. The question is whether they're going to be willing to, and whether corporates are going to continue to generate that kind of labor income.
Bruce, you're going to hate me. We talk to people in the White House and we say, when you go into the Oval Office and sit on that gold couch, how does a president take in your economic data? When you wander into Mr. Diamond's office and you have to do a briefing, how does he take in the Kasman economic data?
Well, I think he takes it in, and he's got his own views. I remember quite distinctly in the past that the leadership of the firm was much more clear-cut about understanding dynamics and financial conditions and how they were going to impact on the macro economy. That's something which, as economists, we may not fully appreciate. I think that's one of the issues we have to face right now, is financial conditions are tightening. As we're seeing it, and we give our advice, as we see it, we see the economy slowing. We don't see a financial storm coming right now. And we think the economy is going to avoid recession as we go through the rest of this year.
John, if we go into hurricane season, can we get Kasman in here to do weather reports?
I think Kasman practiced that with PR before coming on, that's for sure. Bruce.
Okay.
Good to catch up, buddy.
In the storm
as always,
out.
Bruce Kasman at JP Morgan. My favorite tweet this morning, the hurricane's been downgraded to a light summer breeze over at JP Morgan. Jokes aside, I think Lloyd Blankfein addressed this in many ways. I'm not sure if it's intentional or not when he said this over the weekend, the former Goldman CEO. Dial back a bit the negativity. If I'm managing a big company, of course I'm prepping for the worst. Just think about that in terms of what Jamie Dimon said.
I missed that, John.
But the economy is starting from a strong place, riskier times, but we may yet land softly. The words of Lloyd Blankfein.
I missed that, John. That is the tweet of the weekend. No question about it.
Lisa, you picked up on it too. It's the difference between running a company and making a market call.
Yeah, well, and it's also the difference between saying that you are preparing for something and looking prudent and sending the wrong message about the economy. I wonder how much this was really keyed into Jamie Dimon as well as Elon Musk over the weekend, talking about a super bad feeling, or some of the other CEOs really talking about their concerns about economic momentum. There. Well, I mean, honestly, how much is this a response to that? Basically saying, hey, guys, what are we doing here? Talking in vague, platitudes.
What did we learn about Elon Musk and Tesla? Is there actually going to be job cuts or not?
He said that, there might not be cuts around the edges, but the salaried workers will remain flat. What's he doing?
I've got no idea. I think he's a brilliant guy with an incredible mind who seems to add value everywhere he goes, whether it's SpaceX or Tesla. But I got the most ridiculous message from a Bloomberg subscriber on Friday when I was covering this story about Superbad. When we started to talk about a super bad economy and we were talking about super bad. And a lot of people were thinking, oh, yeah, I remember that movie.
Yep.
Do you remember the fake ID card of McLovin?
Yes.
His birthday on that?
Yep, June 3rd.
June 3rd.
Yep, that was
Friday.
what people, I know, that
June
was.
3rd. To think that's where we are now. That's what
It's
we've
poetry,
sunk
John.
to. That's the conversation.
It's poetry, John, just the references to popular culture.
Tom's confused. So we'll have to clear that one up.
We're all confused.
Let's not do it here, Tom. Let's not do it here. Futures up by more than 1% on the S&P from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, Prime Minister Boris Johnson is fighting for his job. Rebel members of his Conservative Party have forced a confidence vote later today after a series of scandals. Johnson wrote to Tory lawmakers saying the vote gives the party a chance to end weeks of speculation and take the country forward. The world's largest independent oil trader says the U.S. may allow more sanctioned oil from Iran onto global markets, and that's even without a revival of the 2015 nuclear accord. Vitol says the U.S. may turn a blind eye to the sanctioned oil if it helps lower those gasoline prices. And President Biden's commerce chief says it may make sense to lift tariffs on some imported products to help ease inflation. Gina Raimondo told CNN that household goods and bicycles could be exempted from trade duties, but she said some steel and aluminum tariffs will stay in place to protect U.S. workers. And shares of China's ride-hailing giant Didi are soaring in pre-market trade. According to the Wall Street Journal, Chinese regulators are preparing to wrap up their investigation of the company and restore its main apps to mobile stores. The report also says that Didi will face a relatively large fine. In France, military reenactors, veterans and tourists gathered at sunrise on Omaha Beach to mark the 78th anniversary of the D-Day landings. Allied forces invaded Normandy on June the 6th, 1944, and eventually ousted the German occupying forces. A handful of the troops that fought that day, now in their 90s, will attend ceremonies throughout the day. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Inflation expectations have not gotten out of control. The short-term expectations are super high, but that makes a lot of sense. But the intermediate to longer-run expectations are really not much out of the range where they've been over the last decade. And this is why the Fed needs to act now.
And again and again and again. Another 50 basis points coming up, apparently. That was Randy Krosner, the professor of economics at the University of Chicago Booth School. From New York City with Tom Keene and Lisa Abramowicz, I'm Jonathan Ferro. Futures positive a little more than 1% on the S&P. It's a bounce back from Friday's losses on the Nasdaq 100, up by 1.5. Yields a little bit higher too, by a couple of basis points, adding to the big gains from last week, up by around about 20 basis points on a 10-year last week, Tom. Up again this morning. Let's call it 295 at 294.97.
Yeah, absolutely, John. And I think we need to gauge the drawdown right now, particularly with NASDAQ up 1.5%. The NASDAQ's still behind here, but the drawdown for the last couple of weeks, John, has significantly improved, minus 13 on the only index that matters.
Is it a bear market rally or something more durable?
Yeah.
JP Morgan taking the latter, Tom.
Yeah, it's up there.
They say given the reduced positioning and cautious consensus outlook, we know market internals over the past month are pro-risk. They think this can become more durable.
All of Bloomberg's surveillance, folks, has been wrapped around history of it going from the ahistorical silliness of modern academics to that history matters. Peter Trubowitz nailed this at the LBJ School in Texas and now holds court at the London School of Economics. We're thrilled to let you know that Professor Trubowitz survived the Jubilee. Peter, 75 years ago, Taylor Swift is a big story in New York this commencement season with her appearance at New York University. In a more serious time, George Marshall, 75 years ago, got up at Harvard and talked about the Marshall Plan. If we're going to, quote unquote, save Ukraine now or after the war, what's the Marshall Plan look like?
Hey, Tom, good to be with you. You know, when Secretary of State Marshall made that famous speech at Harvard's commencement 70 years ago yesterday, he saw American international engagement as essential imperative to prevent a return to the ideological extremism and nationalism that led to World War II. And today, those dark forces have returned in Europe and, alas, in America itself. And I think Marshall, were he alive today, would be alarmed and wonder how America's leaders, and not just America's leaders, had allowed the country to veer so dangerously close to a political abyss that he and others did so much to steer clear of it. It's more than just providing the money. It's a message. And the message back then was that America's long-term interests were served by fighting ideological extremism and nationalism.
Peter, let's go to the weekend. Let's go to the immediacy and me watching in the lower right screen that I've got here, Mr. Putin on about an every 3-day basis. How do you respond to the idea this is just about Putin?
I don't think it's just about Putin, but I think Putin, you know, he moves the needle whenever he threatens to escalate, which is exactly what he did yesterday. And that in response to the American and also the UK decision to provide long-range artillery that is frankly capable of hitting Russian soil from Ukraine. And so, you know, he stirs the pot when he does that. That's not why he's doing it. I think what Putin has recognized is the same thing that Zelensky has recognized, is that they're in for a long, hard grind. That's where we are. You know, we reached the 100-day mark last Friday in this war, and that seems to be where we're headed. Neither side seems to be interested at all in a ceasefire, let alone a diplomatic settlement to the fighting.
In the meantime, the collateral damage is escalating, Peter, and this is something that I was really alarmed about over the weekend as I read about the Black Sea and the idea that Russia is saying, look, we'll allow some of these ships to export grain from Ukraine, where 98% of the Ukrainian grain is exported, if you relieve us of some of the sanctions that you have put on us, Western countries. And the Western nation said, no chance. How do you deal with a nation willing to really hold the world's food supply hostage?
Well, we'll see how long Putin can actually stick with that position. You know, just like the West, U.S., Germany, UK, France, have to worry about kind of internal divisions and how their actions play internationally. So does Putin. And Putin got hammered pretty good by African leaders actually late last week for holding up the grain shipments. And so that position is also, it's not clear that he can sustain that for a long period of time himself. He's also focused on the court of international opinion. Remember, not all countries have lined up behind the United States and the European democracies on the war in Ukraine. And so, and he knows that, Putin knows that, and I think that's part of his, will ultimately be part of his calculus also, with respect to the grain shipments.
Peter, wonderful to get your thoughts, as always. Peter Trubowitz there of the London School of Economics. Lisa, at the epicenter of a lot of these conversations, there is a problem for this president domestically. It's inflation, it's prices. And story to story, what we see is this administration willing to reassess certain elements of foreign policy to address what's happening at home. We're seeing that in China, with the Commerce Secretary having an open conversation about considering removing some tariffs. We're seeing that with Saudi Arabia. We're having an open conversation now about the prospect of the president visiting the Crown Prince. Where we are not seeing it is on Russia. We're not seeing it there at all.
And even in Europe, I mean, yes, in the United States, this is definitely an issue, but even more so in Europe, where oil and gas prices are just sending inflation skyrocketing. How much do people start to push back and have more allowances for Russia's behavior? We haven't seen it in mass yet, because at a certain point, this goes to something far beyond simply just rhetoric. This is an existential threat to what it is to be a democratic nation.
Pushing ahead, Tom, to CPI on Friday.
It is. There's a nice separation here, John. There's the gloom of the high of the top numbers, and certainly that's important to Washington. and important to everybody, let me make clear we live in a nominal inflation space. We are paying for food. We are paying for energy. But the headline here, as Jan Hatzius touches on at Goldman, is the survey number. These are survey, John, is from 6.2% down to a reading this Friday of 5.9%. That would be the hope that's out there right now.
You can't eat and drink and travel on core CPI. Tom,
don't get me going. Everybody knows
the
how
big
I feel
divide,
about
but you're
this.
right to go there, because the front pages of the newspapers will run with the headline numbers. On Wall Street, they'll be responding to the month-on-month core figure, Tom. Are we seeing signs of deceleration month over month? That's what's been the indicator that a lot of people are focused on this market.
Yeah, and there's all sorts of other ways to do this. The Dallas Trim mean now is a paltry 3.75%. I mean, you just, there's any number of ways to measure this. Guess what? We all live nominal.
This is what we're building up to. We've got the ECB on Thursday, then it's the big inflation report in America this coming Friday. Equity futures up by 1.1% on the S&P. Yields are higher by a couple of basis points. This is Bloomberg.
This is still a very, very strong and too strong labor market. So we need to see that slow.
We do expect a slowdown in the economy, and I think that that's needed. That's what the Fed wants.
There's nothing that's going to stop them from continuing this march of 50 basis point increases.
They really cannot right now, I think, suggest that they're going to slow. They really need that clear and convincing sign.
Recession probabilities rose the moment the Fed started talking about hiking.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good news is bad news. It drives you nuts too, doesn't it? From New York City this morning, good morning for our audience worldwide. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Futures up by more than 1% on the S&P. TK, I know it frustrates you too. Good news for this market at the moment. Bad news.
John Stolfus, the raging bull, he has been decades and decades and decades participate in the game, just comes out, John, on the high levels of negativity that are out there right now. Did we see that with a vengeance, say, in the last 4 or 5 days?
We saw it big time on Friday, Tom, off the back of the payrolls report. And I have to say, away from the headline number, it wasn't exactly inflationary, was it? The participation rate was higher, unemployment was stable, wages were actually slightly disappointing in some places.
Here's the headline, John, for me this morning. You look at all equities, bonds, currencies, commodities. I've got an individual screen. Lisa's got a different view. You've got a different view. Copper, jump condition, China opening.
The summer of Volcker, though. That is the issue.
There we go.
That is the issue.
There we go.
Ramo, that's the
That
worst
was
of Bank
such a
of
good
America
movie.
this morning.
I loved Roger Ebert. Roger Ebert
Wait
gave
for
it a
the
bad
sequel,
review.
TK.
Lisa, what did you think of the summer of Volcker?
We'll see. We're still in it, evidently, according to what you were just quoting. I'm looking right now at the key question. Have we priced in withdrawal of liquidity from the Federal Reserve? Have we priced in how hawkish they will eventually be? To your point, John, about is bad news good news and good news bad news, this really underscores how much of that has been baked in and how much there could actually be some more disruptions to market as they kind of come to the realization that the Fed is not going to back off.
I often think about this. Can you imagine accidentally putting on business TV, business radio, tuning in and hearing people talk about this dynamic? How foreign that would sound to you, this idea that that's how Wall Street is operating. Again, that somehow good news is bad news.
You know, it's a nuance right now, given the inflation. And we all see it when we go out, when we drive anywhere, when we fill our gas tanks, or when we go to the stores and we see how much higher the prices are. And what is it? Who is it good news for, right? Is it good news for the upper class, or is it good news for everyone? And right now, it is not good news for the lowest tier. So that would be actually quite relatable, I would think, for a lot of people.
Better news for this equity market, and well said, Bramo. I like that. Futures up by 1% on the S&P 500. On the Nasdaq 100 up by 1.4%. Yields bleeding just a little bit higher by a couple of basis points. The next one in the diary is the ECB Thursday, the big one for the Treasury market. US CPI, the inflation report just around the corner. Look out crude, look out 120 very close, Lisa, right now. 119.45, up a half of 1%.
Yeah, and this comes after Saudi Arabia raised prices on gas shipments and oil shipments to Asia, sort of indicating how much more pricing power they have going forward, and raising some concerns about how much gas prices can rise, which I think will be one of the main issues that Congress will be discussing today as they return after the Memorial Day recess. They're coming back after the beginning of driving season in the United States with gas prices at a new record high of more than $4.85. How do we deal with this, given the fact that you're starting to see on the lower margins people pulling back in certain discretionary areas in response to the base prices going up almost everywhere in their lives? Today, we also have UK Prime Minister Boris Johnson facing that no confidence vote. How much this actually affects policy? Unclear. Markets aren't really responding, but this highlights the political danger for the leader of one of the bigger economies in the world at a time of such high inflation and, frankly, angst over what happened during the pandemic and some of the shutdowns and who was allowed to attend a party and who wasn't. At 1 p.m., we get a keynote presentation at Apple's Worldwide Developers Conference. It's of particular importance this year because Apple shares are down more than 17% so far this year. What can they indicate in terms of innovation, John, to really highlight growth aside from just a valuation story, aside from just getting hit by the Fed? Can they give a sense that they have more under belt that can actually juice growth beyond where people currently expect?
A 12-month price target consensus on the ANR screen on the Bloomberg, 185.69. Just to go through it for Apple. Lisa, thank you.
Yeah,
Tom,
people are bullish.
36 buys, 11 holds, 1 sell on Apple. That's where the analyst community are on that name.
Yeah, in the defense of everybody, I mentioned Ron Josie on Amazon earlier, and there's a lot of other reports out as we go to mid-year, John. Everybody's tweaking. Maybe they're coming in. To me, John, it's a major divide. Forget about growth value, and Sarah will be great at this. It's about profit versus no profit.
Yep, well said, Tom. And we're seeing that with some of the tech names. Look at the hiring practices of some of the tech names. Can do that a little bit later. Sarah Hunt, portfolio manager at Alpine Woods Capital Investors, joins us now. Sarah, let's start here. We'll work our way through it. Have we seen the high on yields, the bottom in equities?
It's a tough call. I'm not sure we've seen the high yields. We may go back and test those. I think that there is a limit to which yields can rise, though. And we've talked about this before. I mean, part of it is that you've got a whole lot of government debt outstanding globally, and higher rates, it makes that much more expensive. There's also a question of you can affect the short end of the curve if you're raising rates, but the long end of the curve acts a little bit independently of that, depending on what's going on in the economy. So there are a lot of different forces driving that. I think we may have seen a near-term peak, but I'm not certain that that's absolutely the case, but I don't know how much higher we can go than the highs that we've seen before. And I think equities will start to retest if you start to get earnings revisions. I'm not sure we're seeing that yet. That might be later in the year. It sort of depends on where earnings go. I think that's very important to the equity picture right now because you've seen a multiple compression, but you haven't seen much of a drawdown on earnings.
Sarah, is there any value to what I just spoke to John about profit versus no profit, going down an income statement and trying to sort out which profitable companies to acquire?
Absolutely, because the difference between having free money and money sloshing around everywhere and sort of a tightening of conditions, which is what the Fed is trying to affect, as well as changing interest rates, is that the companies that have been able to continue to borrow money at almost no cost and continue to fuel top-line growth with no profits are going to have a much harder time doing that. So this is really the time to be drilling down into those income statements and those cash flow statements and trying to understand who's really making money and who's using a lot of accounting gimmicks to make it look like they're making money, but in the end, they're not actually flowing cash. That's going to continue, I think, to be very important.
And Sarah, there's a larger issue around that exact point, which is, have we priced in Fed tightening or Fed withdrawal of stimulus?
You know, what's interesting about the bad news versus good news debate is that you've also got this ingrained reaction function from investors, which is that bad news means that the Fed is going to come back to their rescue. The inflation picture completely changes that. And I think the last decade since the financial crisis, you've seen every time things got bad enough, the Fed backed off. They weren't looking at an inflation picture that we're looking at now. You could argue whether or not raising interest rates is going to really affect the price of oil, which is one of the biggest components of inflation, and food, which is really problematic, that has nothing to do with what the Fed is doing. But in the end, with inflation this high, it's very difficult for the Fed to change its function, its reaction function, when right now investors are expecting what's been happening for the last decade.
Sarah, that sounds like a lose-lose situation for this equity market through the summer.
Again, it's going to come down to earnings. And I'm not sure yet that it's lose-lose. I mean, it depends on how badly margins get compressed. If employment starts to get much more expensive, there are a lot of things that are driving the earnings picture. And right now, revisions have not been too negative. You've seen, like I said, the first wave of multiple compression just because the Fed started raising rates. Now the question is going to be, can earnings hold up in this situation? And to your point also earlier, John, that employment cost index was not as robust as people have been continuously afraid that it will be. You need to see some wage rising, especially at the lower end. The question is really going to be, how badly does that impact profits going forward? And when does that start to come through when people start talking about it on earnings calls?
Given the lack of visibility, Sarah, and given the lose-lose prospect on both sides that have very different reasons for the negativity, how do you hedge?
Well, for us, we look at a variety of different instruments. We use some put options. We use a variety of different ways of hedging. But it's also making sure that the companies that you're in are not the kind of companies that are going to be most affected by the problems that you're seeing right now. So this goes back to the profit versus top line growth. You need to be showing that you can make money in this environment and continue to make money. And if you can also show that you can grow your earnings, that's going to end up accruing more investors to those areas. Because the growth is not, people will never walk away from growth completely. And that valuation has compressed somewhat versus where people were at the beginning of the year. So I think that people still want to look for growth, but it has to be profitable growth. And it has to be something where you can see, even in an environment where spending is potentially muted because of higher costs elsewhere, that you still have the ability to generate good earnings and good returns. And that's going to just continue to be most important.
Sarah, thank you. Sarah Hunt of Alpine Woods Capital Investors with a nuanced view on a complicated equity market. Tom, to pick up on a theme that you've been very, very focused on, tech and cost cuts as well. Kurt Wagner here at Bloomberg did a wonderful piece over the weekend. He broke it down. Snap, cutting sales and profit forecasts. Hiring's going to slow. Lyft said it will bring on fewer people and look for other costs. Microsoft hitting the brakes on hiring in several key divisions. Instacart dialing back hiring plans. Amazon, that was the key of the quarter, wasn't it? When Amazon came out, Tom, and said too many workers, too much space. And we've seen it across industries, across companies.
Yeah, on each of those stories, I don't have any individual expertise other than to say they're not all comparable to each other. Amazon was a huge pandemic build out. Jassy, Jassy, the new CEO, has to manage away from the pandemic. That's different than the others. John, I'm going to go to Lyft, which has never had a free cash flow positive. Maybe this year they will. They've never had a positive cash from operations, and they're running on a margin, an EBITDA margin of a negative 13%. You can't compare Lyft to the others. I don't like the way we do that. There's two separate groups, the haves and the have-nots.
And it's the end of super loose financial conditions, Tom, and they've got to make a move.
Yeah, that filters into it. I take your point on that.
Vishy Tripatur of Morgan Stanley is going to join us shortly in the next hour on financial conditions and what's happening in credit. A slightly more cautious view from them as the year has progressed. Futures up a little more than 1% on the S&P. Yields a little bit higher by a couple of basis points, 294.97. The inflation report just a few days away. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, rebel members of Parliament from Prime Minister Boris Johnson's Conservative Party have forced a confidence vote today that follows a series of scandals. Opponents will need a majority of 359 Conservative lawmakers to force Johnson from office. Uncertainty over his future comes as Britain's faced soaring energy bills and the highest inflation in 4 decades. Saudi Arabia is signaling confidence in demand for oil. The kingdom has raised prices more than expected for Asian customers. Oil has rallied almost 60% this year, rebounding demand from countries recovering from the pandemic coincided with a tightening market after the invasion of Ukraine. And life in Beijing is taking another step towards returning to normal. The city is rolling back coronavirus restrictions after declaring the latest outbreak was under control. Public transport will resume in most parts of the city. Restaurants will resume dine-in service and movie theaters will reopen with limited capacity. North Korea has now set a record for the most rocket launches in a single year under Kim Jong-un. 8 short-range ballistic missiles were fired on Sunday. North Korea has launched 31 missiles so far in 2022. There's speculation that Kim may be preparing for his first test of a nuclear device since 2017. And billionaire Paul Singer's Elliott Investment Management wants $456 million from the London Metal Exchange over the chaos in the nickel market. Elliott's lawsuit is challenging the LME's decision in March to cancel nickel trades after a massive short squeeze. The LME's parent says the claim is without merit. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Yes, inflation's a problem. In no way do I want to minimize that. The Fed is independent. They are taking action, and you're already starting to see that. But fundamentally, what we have here is a robust economic recovery, and I think that's in large part due to the president's leadership.
Gina Raimondo there, the U.S. Secretary of Commerce on CNN from New York City this morning. Good morning. Futures on the S&P positive by more than 1%. The Nasdaq 100 higher by 1.4%. TK, they're very upfront and open about saying the Fed is independent, but every time they say it, it's like the Fed, the Fed, the Fed. That's the bit you hear, isn't it? Not the independent bit. It's the Fed has to deal with the problem. The Fed's going to deal with the problem. We're independent. They're independent. Tom, for me, I think highlighting the Fed's independence at the same time as saying they need to control inflation, those two things can contradict each other.
The problem I have with this is, I think adults on Wall Street get that the Fed is independent. And either they know it or they can articulate McChesney Martin, Truman, McChesney Martin, LBJ, and on we go to Fed independence. But the bottom line, John, is Chairman Powell, and frankly the vice chairman as well, probably have to get in front of senators and congressmen and get yelled at. That's really where we're heading here, and they become piñatas.
There is a political element to this. I think they're becoming a piñata, Tom.
It's your fault.
They have become. What, for questioning the Federal Reserve? I think many others have done the same thing.
Do you want to do our Downing Street thing,
I don't,
John?
do you?
I know you're on top of it. Elizabeth Burden joins us right now. Lizzie Burden is at 10 Downing Street as well. Lizzie, does Lawrence the Cat's vote count today?
Well, he's already been into Downing Street, so I wonder if he's made it. But no, the vote is meant to be between 6 and 8 p.m. tonight. That was announced by Graham Brady, the chairman of the 1922 Committee of Conservative Backbenchers, which means that we've hit that 54 number of MPs.
For America waking up, Lizzie, I want you to define who are these guys, the Butch Cassidy line from years ago. In America, we have an understanding of conservative or Republican cliques. Who are these people going after the prime minister?
Well, that's what we don't know. They've got this minimum threshold of 54 letters calling for a vote of no confidence that needed to be reached to have this vote tonight. But we don't know how far beyond 54 they're at. And it could be made up of all sorts of different cliques. And that's what will be interesting to find out. How many people are against the Prime Minister? How bad is this situation for the Conservative Party? Because now you've just got to this point where they clearly have realised that Boris Johnson might not be the vote winner that they thought he was in 2019.
Lizzie, how much is this a micro issue versus a macro issue? In other words, how much is this about Partygate and the hypocrisy of saying everybody has to stay home for the holiday and not see their relatives while he holds a party in a garden during the peak of COVID versus people being angry about where inflation is, people being angry about their costs of living?
Well, it's been weeks and months of speculation of when we were going to get this vote of no confidence. I think the Partygate scandal and the report from civil servant Sue Gray has been the straw that broke the camel's back. For most people, it's the cost of living crisis that's really painful for them. You've got surging inflation in the UK. But let's not forget, this goes all the way back to Pestminster. Scandal again and again of sleaze reported in Westminster. So it's been one thing after another that has got us to this moment today.
A scathing letter from Jessie Norman, the Conservative MP, Lizzie, and I'll share some of it with our audience. You are apparently trying to import elements of a presidential system of government that is entirely foreign to our constitution and law. But you are not a president, and you have no mandate other than as an MP and from the confidence of your colleagues. Lizzie, just frame how vocal, how public some of this has become.
Yeah, I mean, Jesse Norman also said that this government's been lurching from crisis to crisis, that it has no sense of mission. And you could argue that that's because of pandemic. The response to coronavirus has got in the way of Boris Johnson's levelling up mission, his net zero mission, of course, the war in Ukraine, another thing that's got in the way. But what will be interesting to hear is what's happening tonight in that room, what Boris Johnson is promising his MPs to get the mission back on track, because there is so much that they will want to see delivered before the next general election so that they can go back to their constituents and say this is what the Conservatives can do.
So, Lizzie, let's talk about that policy. I think this is when it starts to get on the market's radar. What's the policy shift that we should be anticipating?
Yeah, well, it would be interesting to see if we get even more response to the cost of living crisis, because, of course, Rishi Sunak was initially criticised for not doing enough after his March budget. Then you had another package of measures. But we're still expecting to see more Bank of England rate hikes in the second half of the year. That's what the markets care about. And the other thing markets care about is whether Boris Johnson wins tonight and brings forward a general election. That's the big risk, as well as inflation.
Lizzie, great to catch up as always. Lizzie Burden there, Tom in London, working through some of these issues. And when I say it comes onto the market's radar, I'm talking in very, very narrow terms, Tom. This won't be a global market story.
Okay, that may be there, but John, you've got to expand on this idea from Mr. Norman that this is a prime minister, under my understanding of how a prime minister acts, acting presidential. What does that exactly mean?
I think he's trying to make the point to remind the prime minister that, Tom, ultimately, he's in the position he's in because he is an MP, and ultimately he's only there because he has the confidence of the other Conservative MPs, and that's the way the system works. That's why last week I said, Tom, you asked me, is the Prime Minister under pressure, would he resign? And I said last week that was up to him, that was his decision. Now you start to go through a process where it starts to take things out of his hands just a little bit. You put those letters in, you reach a threshold, you have a vote. Even if he gets past that vote, Tom, even if he gets past that vote, there's going to be immense pressure on him to step aside and let someone step back in. Lizzie mentioned the prospect of having an election. If the Conservatives went to the people right now in the UK, Tom, they'd find it somewhat more difficult than they found it in late 2019.
I mean, John, I look here and, I'm reading about this like everybody else. This from the Times of London. John, I know you're impressed that I gaze over the Times of London.
I think you read the British press more than I do, TK.
But they go over some of the votes like this of Margaret Thatcher, of John Major, of Theresa May, where they all won. Thatcher barely won, I guess. I don't know. They won by 50%, I guess, or so. But what's the so what after he wins today, if he wins today?
Well, once, Tom, you've basically got a large chunk of your party come out and say they have no confidence in you, even if you win the vote, you've got a big enough chunk that's sitting there. It doesn't look good, does it, Tom? That even your own party doesn't have the confidence in you to go forward from here. And we go back to the election point, Tom. If the Conservatives went to the polls today to have an election in the UK, would they do well? A lot of people don't think they would. Can they do better?
Election?
For them to do better, they would have to have a new Prime Minister.
When's the next election?
That's going to be several years away, Tom. Last one was
really?
2019.
Several years away?
Unless they call one themselves.
John, you're not supposed to say that. You're supposed to say, John, you're supposed to say, Tom, it could be in weeks. We need a
You want me to build it up?
There.
Well, it could be if they call one. But that's up to them, Tom.
Okay. I'm just looking for a road trip.
You always are. That's the only reason we're covering this story.
Thank you.
No other reason.
Thank you.
Futures are at 1% on the S&P. Not really. This is Bloomberg. Live from New York City this morning. Good morning. Equities higher. Lisa called it again a nice move. We got a nice move up by more than 1% on the S&P.
It's very good.
On the Nasdaq 100, futures up by 1.45. The bull-bear debate continues on the bullish side. JP Morgan, RBC, Lori Calvasina cutting a price target, but still looking for 4,700 year-end on the S&P. Then you've got Mr. Hahn at Bank of America. You've got Mr. Wilson at Morgan Stanley. Hartnett coming out and saying no fun until the Fed is done. No fun until the Fed is done. What will it take for them to be done? He's looking for a negative payrolls print before that happens. Mike Wilson says we can test 3,400 on the S&P, maybe by late August. That's the equity story. Here's the bond market picture. Last week, a 20 basis point move on the 10-year. The questions you're asking, have we seen a low on equities? Have we seen a high on 10-year Treasury yields? The high of the year so far, Tom, early May, 320. Right now, 295,
John,
15.
We haven't addressed this. What happens when we get a 301 10-year? What's its signal?
Do we start to think about maybe going through the highs of the year again, Tom?
Exactly.
And if that's the case, then the equity bulls have to have a bit of a rethink, because that's been a little bit of a challenge to that bullish view in the equity market over the previous few months. That's the bond market story stateside. Over in Europe, think about this. We started the year on a German 10-year yield at negative almost 20 basis points. Right now, positive 127. And this morning coming very close to 130. Yields just a little bit higher through last week, a whole lot higher, in fact. A little bit lower this morning, going into an ECB decision this Thursday with euro-dollar at 107.27. And Tom, many people, the consensus view, just the consensus view, expecting this ECB this Thursday to lay the groundwork for a move at the next meeting and the one after that.
And you see the tension, John, in euro-yen, it hits a round number 140. That's a big deal. It's not through where it was in 2015, 2014, but it gets you back to strong euro, weak yen, going back to the financial crisis.
Get excited, Tom. You might just be able to stay awake through a whole ECB news conference this Thursday.
It could be. It could be exciting.
Maybe. There's a better possibility, a better chance. Anyway, that's the cross-asset price action. Here's a treat for you. Brammer's on single names.
Single
once again.
names? Nice.
Good morning, Lisa.
She's
John,
looking at
good morning.
nice,
Honestly,
nice
I was going to say there are some nice moves here.
Nice
John, thank you
moves.
for building up that ECB meeting for Tom. That was really, you might be able to stay awake is the best advertisement I could imagine. A real nice move if you want to go there for DD Global. Shares popping more than 50% ahead of the open after the Wall Street Journal reported that China was wrapping up their investigation into this ride-hailing company. There is a speculation that China in general is moving away from some of the crackdown on some of their tech companies in response to the weakening of the economy. You're seeing some sympathy gains in Uber, shares up 2.5%, and it's really fueling some of the tech movement, not only in the U.S., but also in China and globally. Tesla, who knows what's going on with Tesla? Shares popping a little bit after that more than 9% drop on Friday, up about 3% with, I guess, a retracement from Elon Musk's assertion that he was going to cut 10% of staff. Now saying it might stay around the same, but salaried staffers might actually not move around. I can't make any sense of this. John, can you?
I can't make sense of any of it either.
It's hard to imagine how people can trade on it, but here we are.
Every time I say anything on the matter, you get abuse for it anyway. So on this one, I'm going to stay out of it.
I will not stay out of it to say that this is a major company in the S&P, in the NASDAQ, and it's shifting around massively on tweets by a founder who is cryptic at best and misleading at worst. And that, I think, is definitely a major issue for a lot of people.
There's a guy called David Gura over at NPR, Tom. He wrote a really nice piece on this in the SEC over the weekend. It's a decent read. One rule for him, seemingly, and another rule for everyone else.
Yeah, I've been saying it for years. I don't know where Gura picked it up. I'm waiting for the royalty check to come in. But come on, John.
I'm not sure they come from NPR, Tom, but get in touch.
David, buy me a martini. That's all I ask. Buy me a Gura, which is a Gura's like an Otis, which is an onion instead of an olive.
Okay.
I'm gonna
that sounds disgusting.
Save that conversation and David Gura.
Hey, you took us
we
there,
appreciate that. No, but look, this is important. Also important, we're watching Apple shares ahead of that conference that they're having today, where they're going to announce the iPad. It is a significant deal. The share's up 1.4%. It's significant because we're talking about valuations and where a profit's going to come from. Can you rejigger the iPad to actually engender some sort of enthusiasm? Will the next iPhone be something that really gets people buying more?
That's a nice report. John, don't you agree?
I thought there was some nice coverage of some nice single name moves.
All right, okay,
and
a
lot
guys.
Of green.
Okay.
A lot of green there.
There's so much green.
I mean, is
this really
Can you find one loser?
Real quick, Amazon, their share split actually went through today, which is interesting because you are seeing that those shares are even less now. It's a 20-for-1 stock split. I know that Tom was really advocating for that. And Keurig Dr. Pepper just joined the S&P also today. Those shares up almost 8%.
Keurig Dr. Pepper. It's a complete report. Very nicely done.
Lisa cannot even begin to pretend to be excited about that last story.
Right.
She's like, someone made you do that.
Go
There's no way you chose that name.
Lisa, go Evagura.
Thanks.
Okay, let's move on right now. And this is an incredibly important point. Terry Weissman is global interest rates and currency strategist at Macquarie. They're an Australian shop. But far more, over the decades from Bear Stearns on, Weissman has been one of the great China watchers out there. Terry, I have to rip up the script and get defined from you the magnitude of China coming out of lockdown. Is it overplayed? Is it underplayed?
No, I don't think it's underplayed. But keep in mind that coming out of the lockdown is not really just a derivative of what COVID is doing. There is an important pragmatic impulse these days to Chinese policymaking. And you're seeing it not just with regard to the speed at which some policymakers want to come out of lockdown to help the economy, but you're also seeing it in other aspects of policymaking. And what happened overnight with the decision to dismantle, really, President Xi's common prosperity measures of last year, the regulatory burden, the anti-speculation, and do away with that and come into a new era for China, which is more market-oriented. I think that is really the story here, more so than the lockdowns. In other words, the lockdowns are important, but they're part of a broader story of pragmatism.
Okay, pragmatism leading to what, especially given the fact that people have been talking about the dollar perhaps reaching some sort of peak because we are going to get growth in other parts of the world. Do you agree?
Well, I agree that the dollar may be peaking. I don't necessarily think it's because we're going to get growth in other parts of the world, with the possible exception of China, if in fact they succeed with these pragmatic measures to restart growth. I think the more important thing that's driving the dollar lower in the second half of this year, will drive the dollar lower, is the tightening we're seeing from other central banks, from the RBA, from the ECB, potentially from the BOE. We're seeing it from the Bank of Canada. Eventually, these banks hope to catch up to what the Fed has already signaled with regard to their policy normalization. That is the main theme behind the dollar weakness, not necessarily growth outside of the U.S.
Do you buy this 250 basis point rate hikes by the ECB?
Depends by when, right?
By the end of this year.
250 basis points. Well, that's certainly not what the market is pricing. The market is still hesitant to even think that there's going to be a 50 basis point hike in the month, which is more likely, which is October, because it coincides with new projections, I believe, new staff projections. I think there the market's pricing maybe a 2/3 probability of a 50 bip hike. So no, I would say that's maybe a little bit too aggressive, i.e. 250 bip hikes. But that shouldn't change the story, right? The direction is still towards monetary policy normalization and potentially 4 25 basis point hikes by the end of the year.
Terry, there's going to be a central bank response to all this. And as you mentioned in your research note, there's a partition between troubled international raising rates for all the IMF kind of reasons. But there's an international group that isn't troubled. What are they going to do? Do they follow the Fed?
The group that's in trouble, maybe we're talking about Japan here because their inflation is too low.
Okay, I'll go there. Fine.
Yeah, but we do think that eventually they will raise interest rates. I mean, the way they would do it, of course, is to liberalize the upper bound of the yield range in GDPs within their yield curve control policy. But yes, eventually they will get there. Remember, Japan as well is likely to see an excess of 2% in the second half of this year. So at least rhetorically, they're certainly going to move there. The BOE and the UK is a little bit more troubled in some sense than the rest of Europe. Because the stagflationary issues there might be a little bit more pronounced. But even here, the Bank of England has committed to monetary policy normalization. It's only a question of how much. But the point is that they're catching up, right? Here's what's happening. The Fed has given very strong guidance about what they're going to do, but they've probably reached a maximum level of rhetorical hawkishness. For the Fed, the rest is follow through. For the other central banks, they are still adjusting their guidance. And that guidance is unequivocally in the hawkish direction in the last few weeks. And we believe that that's going to continue until they fulfill on those promises by raising rates. That's what's going to make the dollar weaken in the second half of this year.
Terry, great to get your view. As always, Terry Weissman there of Macquarie. I can't get used to this and the ECB. We've just had a full cycle over the last 10 years where the ECB didn't hike at all. We had Mario Draghi come into power, 8 years in the post at the ECB, no interest rate hikes. The last one was 2011. We've had negative rates since 2014.
I didn't know that.
And you hear these kind of calls. Our strong conviction is on 150 basis points of hikes in 22. That's from Bank of America. On the ECB, I'm really struggling with it, Tom. I'm not saying they're not going to do it. I just can't get used to it. And I talked about this on Friday. We had 10 years of central banks committed to low rates. They all wanted a weaker currency, and they were all trying to engineer higher inflation. Now they're hiking rates. They don't want a weaker currency, and they're all trying to engineer lower inflation. Tom, we've been conditioned by the former, and we're just still trying to get used to the latter. And I think a lot of people in this market doing the same.
And I think the polarity here is Bundesbank and a traditional core Europe view versus the periphery view. Alexander Stubbs of Finland has been, I think, very good on establishing that. What does Lagarde do with the how many constituents she has Thursday? I mean, it's not one or two. She's got like 4 or 5 constituencies.
Lisa, this is a big change.
What's shocking to me is that it hasn't caused more disruption, right? We were thinking that there would never be an exit to the vortex of negative yielding debt, yet here we are. It just is fascinating to me that we haven't seen that.
Do you want to do that voice again, Tom?
It's the vortex of toxic stew.
Nice. Grandma growled on Friday.
She did.
She did.
That was to her children.
100%.
Futures at 1% on the S&P. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, Prime Minister Boris Johnson is fighting for his job. Rebel members of his Conservative Party have forced a confidence vote later today after a series of scandals. Johnson wrote to Tory lawmakers saying the vote gives the party a chance to end weeks of speculation and take the country forward. President Biden's commerce chief says it may make sense to lift tariffs on some imported products to help ease inflation. Gina Raimondo told CNN that household goods and bicycles could be exempted from trade duties, but she said some steel and aluminum tariffs will stay in place to protect U.S. workers. And President Biden will take executive action to boost the U.S. solar industry. Bloomberg's learned he'll invoke the Defense Production Act to provide support for American-made solar panels. He'll also announce a 2-year halt in new solar tariffs that would allow domestic developers to continue using foreign-made equipment whilst U.S. manufacturing ramps up. And shares of China's ride-hailing giant Didi are soaring in pre-market trade. According to the Wall Street Journal, Chinese regulators are preparing to wrap up their investigation of the company and restore its main apps to mobile stores. The report also says that Didi will face a relatively large fine. In France, military reenactors, veterans and tourists gathered at sunrise on Omaha Beach to mark the 78th anniversary of the D-Day landings. Allied forces invaded Normandy on June the 6th, 1944, and eventually ousted the German occupying forces. A handful of the troops that fought that day, now in their 90s, will attend ceremonies throughout the day. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
We wouldn't want China to open the floodgates right away just because of the implications of demand to commodity products that are already seeing elevated prices. We wouldn't want to see a spike in commodities because that could be destructive to demand.
That's what we have seen in many places. Nadia Lovell there, the senior U.S. equity strategist at UBS Global Wealth Management from New York City this morning. Good morning. Here's the price picture in the equity market. A little more than 1% higher on the S&P. Yields up by a couple of basis points, 295.15. Keep talking about the main events of the week. Of course, Tom, it's Thursday with the ECB and Friday with the inflation report stateside.
Yeah, I think the inflation report is a really huge deal as we parse the top line number and some real angst there versus the core number, which on survey is supposed to improve. Right now, Kriti Gupta with us, a chart of the day. Kriti, what do you have?
Yeah, Tom, we got to talk about this narrative of reopening, of specifically China reopening, and that seems to be on a fundamental narrative, at least lifting futures this morning. But we have to put this into the context of what's been driving stocks lower, and that, of course, has been oil. You just heard it from Nadia Lovell, this idea that as you start to see higher commodity prices, it's going to dent demand and therefore growth. That being said, that dynamic that was so inverse in terms of the S&P 500 and oil, we're looking at a chart that looks at the 40-day correlation between the two. It was negative for a good chunk of time and negative by a lot. The idea here, the higher oil prices would in fact hurt the economy and therefore hurt stocks, as opposed to this kind of recombination or reunion of stocks and oil, both being risk assets, both rallying together now. Is this a sign of some kind of normalcy, Tom?
Critty, thanks so much. Up 1% on SPX, up 40 points. Dow up 246 points. NASDAQ, percentage move 1.3% higher as well. What we know about COVID is it moves and it moves around. It ebbs and flows. Right now, the East Coast of America doing better as COVID moves a bit out to the West Coast. But the national numbers are stunning, well under 300 deaths a day, and that is good news for America. Good news in China as well. Enda Curran joins us, our chief Asia economic correspondent. And I noted in the South China Morning Post that Erenhad, I hope I'm pronouncing that, on the Mongolian-China border directly north of Beijing, they have COVID, they're in lockdown. Your Hong Kong struggles as well. How much is there an improvement in COVID in China?
Well, there's no doubt, Tom, cases have collapsed in Beijing and Shanghai. The aggressive restrictions and the lockdown there have clearly worked, and those restrictions are now being eased, and people are being allowed to move along and get along their lives in a way that at least they weren't in recent weeks and months. But to your point, the virus hasn't gone away. It continues to knock on the door of all of China's major provinces. The system in Beijing is now that people are allowed to go to the cinema again, go to restaurants, and get back in public transport, but they have to undergo rigorous and continuous testing within every 72 hours, and that's being replicated across the country. So that's how China thinks it will keep a lid on the disease. But everybody is asking, to your point, how sustainable is it given how contagious this is? And Hong Kong is giving a warning. Actually, we had a very good run with low cases, but of course we're seeing an uptick in cases now. And the government has actually gone backwards on some of its restrictions again, with it's enforcing a kind of a mandatory quarantine. So I think better news for sure on a headline basis for China, but lots of questions about how sustainable this approach will be.
With those questions, given the fact that people are looking at this and saying perhaps this will relieve some of the supply chain disruptions, how much are companies just restarting factories and getting back to business as quickly as they can in China versus multinationals actually accelerating shifts out of China while they can to basically get ahead of the next potential lockdown?
Well, great questions, Lisa. I mean, we do know that production is going to get ramped up. That's the expectation. The port up at Shanghai is starting to get motoring again. We know that on the ground, anecdotally, factories say things are getting better. But to your point, there is a question mark over now. What will be the longer term impact of this in terms of MNCs operating in the industrial supply chains in this part of the world? There has been some evidence already that production orders have shifted from China to Vietnam, for example. Obviously, that's been a long-going trend, but it has been accelerated because Vietnam hasn't been shut down by these COVID lockdowns. On the public record, the chambers of commerce for the major countries like Germany, Britain and the US are continuously questioning China's COVID strategy, and they do say that their members are looking at relocating out of it. So what we'll probably see, Lisa, is a big bounce in trade in the near term, a big bounce in exports and in production. But then the question mark becomes, when will that hit its ceiling, given the ongoing COVID restrictions? And then to your point, what will the longer term ramifications be as some of that production, if it doesn't pull out of China, at least it doesn't get sent to China in the first place and go somewhere else?
And what's stopping them down in 1-800 Moderna, 1-800 Pfizer?
Well, so their vaccine is proven to work. The vaccines that they have, Sinovac, John, 3 shots are proven to be both safe and effective. Not as effective, of course, as the messenger technology, to your point. It's not clear really why China hasn't deployed that. One can assume politics is part of it. But the bigger issue is really that they haven't vaccinated the elderly population to the extent that protects them from the disease. And this was a similar problem in Hong Kong. And indeed, it's been seen in Taiwan to some extent as well. And this is why there's a fear that in Chinese government circles, that if they were to let the virus rip, then obviously the health impact would be quite significant. Again, using Hong Kong as a model in terms of the number of fatalities we had in a very short period of time. So I think the view with China is, for sure, the messenger vaccines are more effective, but they do have effective vaccines. The weakness they have is that they haven't vaccinated the elderly population enough that
And
would give them confidence to allow this country move on.
The first thing I thought just then, I imagine a lot of people in the audience are thinking the same thing. How has a communist country failed to vaccinate the older part of the population? What's happened?
I think, John, it's a fair question because given the control that China has obviously exhibited on its population throughout the pandemic in terms of border control, restrictions on movement, and everything that we've seen more recently in Shanghai, a lot of people have asked how come they have this vulnerability on the vaccination profile of the elderly. It hasn't been pushed through on a mandatory basis. I think a lot of people will watch now to see if that does improve from here. Again, if you go back to Hong Kong, we had a similar story. Say under 70s below were well vaxxed. We came into January, Omicron arrived, and there was a significant impact on the elderly population. That has now improved here. The vaccination profile has improved. It's expected to do the same in China over the coming months.
Enda, thank you. Enda Curran there of Bloomberg breaking it down. Tom, I was surprised by that we've got this older cohort in China, a communist country with an authoritarian dictator who can just make a decision and force it on the population who hasn't done that.
There's there's three regimes. There's actual Pfizer, Moderna, as you mentioned, John, and then there's manufactured Pfizer, Moderna in China, which has been problematic to say the least in terms of getting in. Granted, they got gazillions of people. And the other is the initial Chinese vaccines, but across all three regimes, they're not getting to the older people.
So how constructive can we be about a reopening, Lisa, when all we've seen over the last couple of years is reopen, stop, start, stop, start, stop, start?
And this is a reason why a lot of companies are rethinking where their supply chains are, where they have their factories. China has a certain foothold on this market, but you are seeing that shift, which is raising questions about the longer-term prospects for China in this capacity.
Awesome conversation coming up. Vishy Tripatur of Morgan Stanley. He's joining us shortly on this program in the next hour. Going into that, equity futures higher by 43 on the S&P, higher by 1.03%. From New York, this is Bloomberg.
The jury is still out in terms of the inflationary trajectory.
We have to get past a surge of demand for services.
Inflation expectations have not gotten out of control, and this is why the Fed needs to act now.
It seems like the Fed's comfortable with the idea that the trend is their friend.
Our expectations are really driven by earnings. At the end of the day, the market follows earnings.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio and television. A Monday after the jobs report, and more eventful than I expected. John, coming up, must listen for Global Wall Street, the path to higher yields.
Higher yields through next year as well. Vishy Tripatur of Morgan Stanley, Tom, talking up a yield north of 3%, not just this year, but next year as well in the first half of 23. You try and reconcile that with the view over at Deutsche Bank, Tom. Deutsche Bank thinks we can end up in recession still. They're looking for a severe drop-off in economic growth.
What a nudgy weekend, John, with all sorts of different opinions reframed as we go to the mid-year review. Certainly the equity markets like what they see, but to me, as Tripatur talks about, people can give you a level, but you need a timeline as well. And the Morgan Stanley timeline is out there somewhere. That's the economist Linda Ronstadt.
Well, on the equity side, I think Mike Wilson has been pretty clear up front and center, Tom. 3,400 on the S&P. That's the downside. That's what he's looking for by mid to late August.
Yeah, well, okay, that's the gloom view, but there's some optimism out there. As we mentioned in the last hour, John, I'm going to go with what Goldman Sachs wrote about over the weekend, which is this narrow path that Chairman Powell's trying to walk down.
It's why the likes of Lori Calvasina of RBC thinks we can get to 4,700, Tom. Not everyone is gloomy on the south side. Let's be clear about that. You've got Morgan Stanley on the one side, you've got JP Morgan on the other. RBC is out in that direction as well. Things are finely balanced, let's put it that way.
Finally balanced to Friday, an inflation report. Yes, ECB on Thursday, but Lisa, let's talk about inflation where the great partition is ugly top-line number and maybe a core number that gives the optimists some help.
Okay, gives them some help in terms of what the Fed will do. What does it do, though, to earnings? And we're talking about the ranges, the sort of shades of optimism out there, and I don't want to cast a pall over them, and I'm not trying to just sort of edify my reputation as being a perennial pessimist, but it seemed like the optimism pessimism came from. Perhaps people were overplaying the recession risk, right? This wasn't necessarily a rip-roaring optimism of a new leg of growth in the U.S. economy. Tom, the conversation is all around how much of a slowdown have we actually priced in, how much have we already priced in what the Fed has to do, and how much can the U.S. consumer continue to sustain a recovery and some sort of momentum despite the pressures, despite the inflation that you're talking about.
Our conversation here, folks, on yields is so important. John, I want to get through this at light speed. We got to cover it. All of a sudden, the Jubilee's over. The Prime Minister is under threat, but he's really not under threat, right?
He faces a vote of no confidence, Tom. Basically, a load of Conservative MPs have written in some letters. They've reached a certain threshold. It triggers a vote. We have a vote. Even if the Prime Minister gets away from that vote, he won't get away unscathed, Tom, because ultimately the pressure's building for him to step down. That's it.
There we go. John Ferro did. Let's do it.
Thrilled. I cannot wait.
Clearly.
It's up there alongside the ECB and CPI on Friday.
Data check. John, let me go to the 10-year yield, 2.96%.
320, the high of the year. It came in early May. We've backed away since then. But last week, it was interesting. We started to back up again. Up 20 basis points on the week last week. At the same time, equities breaking down into the close on Friday. It's that good news, bad news dynamic. I actually thought that the payrolls report was pretty nuanced. We had the participation rate climb higher. You had the unemployment rate stabilize. Wages weren't running away, but we ran away with the headline number, Tom. Just this upside surprise on a headline number and the conclusion for so many people. Every time you see that, this Fed has more to do. This market has to go lower. That's the view of some.
Brent crude, 119.82, had a 120 handle there for a bit. Copper up nicely today is of note. I'm going to frame out the math here, and then John's going to pick it up. Vishy Tirupati joins us now, Global Director of Fixed Income Research at Morgan Stanley. Vishy, if you take the vector and you take the x-axis, you end up at a terminal rate for the 10-year yield. Where is your guesstimate of the 10-year yield terminal rate?
It's hard to say terminal rate. I would say looking ahead, second quarter of next year, we expect the 10-year rate to be at 3.15%. And we expect when the Fed is done, we think they will be in the, about in the 3 to 3.25% range. The target range is where they will stop hiking, which would put them above what we would consider to be, or generally understood to be, a neutral, which is a somewhat imprecise estimate of 2.5%.
Vish, if I ask people 2022-23, which year would the high on a 10-year Treasury fall in, most people would conclude 22. They say that because they'd look ahead to 23 at a deceleration in growth. And I think most people would think yields would be much lower, maybe closer to 2 on a 10-year. What's with the Morgan Stanley view, Vishy? Why do you have this view that we can almost stabilize around 3% as the Fed ultimately attacks growth, tries to bring it lower?
So I think I have some sympathy with that news, with that view. I think the key thing to keep in mind is that while recession risks have certainly gone up, our economist models show that recession risks have gone up just from a few weeks ago, 15%, to now something like 35%. So while the recession risks have gone up, the U.S. recession is still not our base case. So that's first important thing to note, is that U.S. recession is not our base case. And we are suggesting that between now and end of the year, we would be pretty much range bound in 275, 3-ish kind of levels. And so 3.15 is not a tremendously far from this range. So especially with you layer in the idea that we will our base case remains not that of a recession, and that the Fed keeps going to get to significant, at least some points above the neutral rate.
So, Vishy, some people would say that a higher long-term interest rate call pairs well with this idea that the Fed isn't going to be overly aggressive, that they're going to allow inflation to remain well above that 2% target for way longer than a lot of people expect. Do you agree?
So we think that the Fed, until including 2023, we don't expect that they will come back to the 2% level of core PC level. So we expect that the inflation will remain above that level through to 2023.
So what does that mean for credit, given the fact that we really saw a rates move for the first part of the year, and now we're looking at something that's looking, to use Tom's word, more nudgy in the credit space? We saw a sell-off for the credit spreads, then you saw retracement, but now there's starting to be a little bit more concern. Where do you fall?
So we think that it's time year to date to say maybe about a few weeks ago, it was mainly a duration-driven negative total returns. We think a lot of that is now in price, and we would be careful at this point and move up in the quality spectrum. So we, within the high yield space, we'll move towards double Bs. Where within the investment grade space, investment grade over high yield, that will be our call. Basically, with the notion is that I want to emphasize this point, that the credit does not have a fundamental problem other than vague, very, very tail part of the credit spectrum. So credit has a valuation problem that we think that compels us to move higher in the quality spectrum.
Sounds like you're also a little bit worried about credit risk, though, Vishy, relatively speaking, to where you were at the start of the year.
Correct. Absolutely. In the starting of the year, we thought should take default risk over duration risk. That played out. I think at this point, we have taken that preference of default over duration off now, and we think this is the time to move higher in the quality spectrum.
But ultimately, Vishy, you don't think we should be worried about a default cycle kicking up in a big way?
Exactly. I don't think we should be worried, at least in the next 12 months, a spike in defaults. That is simply not in our expectation.
Vishy, thank you, as always. Vishy Tirupattur there of Morgan Stanley. And Lisa, to your point, spreads aren't actually indicating anything terrible, are they? I'm not saying that that's a predictive story in any way, shape or form. You make your own call on that, but around 400 basis points, it's not the end of 2018 yet, is it?
And if you want to go to something that will inevitably exasperate you, the good news is bad news. The good news of those credit spreads remaining in check is bad news for stocks in some people's eyes, because what it means is that the Fed is not going to be concerned about tightening credit conditions, because companies are not seeing financing absolutely freeze up. So when the Fed put comes into play usually is when that starts to get triggered, and we're seeing no signs of material stress, at least in broadly speaking. On some of the triple Cs and the lower rated incomes, we're seeing a little bit of a bit more of a disruption.
We touched on the last decade in reverse. I spent at times part of the last decade going over to Europe and sitting down with central bankers, and I'd always ask them every time we had a bit of a sell-off, are we seeing an unwarranted tightening in financial conditions? And what that was just a question to set up the policymaker to say whether they wanted to push back against what we'd seen, say, in the Italian debt market, because ultimately they always wanted easier financial conditions. And now you have to kind of reverse engineer the question, Tom. Are we seeing an unwarranted easing of financial conditions that this Fed wouldn't be pleased about?
I just think there's a lot of angst out here centered around data dependency. What I love about Vishy's stance is I believe the math is we're 19 basis points away from where he thinks we're going to be a zillion years from now, a zillion quarters from now.
First half 23.
I mean, we're really on a dynamic basis, John. We're almost there.
But if you ask people, Tom, next year, if we're going to see the Deutsche Bank story, a deceleration in economic growth.
That's a different story.
And we're still at 3 on a US 10-year.
I agree.
That's hard to...
That's the debate that... And to be fair, and I give you and Lisa great credit for this, we don't talk enough about the bond bear market of price down, yield up.
Lisa writes about it often.
Well, look, I think that the issue is that you are seeing bonds with a material drawdown, and actually investment-grade credit more than government bonds. But what are people going to do with that? Have you seen the mass outflows, the sort of forced selling, or is this basically pain that people have been expecting for a long time and a retracement of what we saw during the pandemic?
Equities up 1%. The ECB on Thursday. The inflation report this coming Friday. For our audience worldwide, heard on radio, seen on TV, this is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Saudi Arabia signaling confidence in demand for oil. The kingdom has raised prices more than expected for Asian customers. Oil has rallied almost 60% this year. Rebounding demand from countries recovering from the pandemic coincided with a tightening market after the invasion of Ukraine. In the UK, rebel members of Parliament from Prime Minister Boris Johnson's Conservative Party have forced a confidence vote today. That follows a series of scandals. Opponents will need a majority of 359 Conservative lawmakers to force Johnson from office. Uncertainty over his future comes as Britons face soaring energy bills and the highest inflation in 4 decades. Life in Beijing is taking another step towards returning to normal. The city is rolling back coronavirus restrictions after declaring the latest outbreak was under control. Public transport will resume in most parts of the city. Restaurants will resume dine-in service and movie theaters will reopen with limited capacity. North Korea has set a record for the most rocket launches in a single year under Kim Jong-un. 8 short-range ballistic missiles were fired on Sunday. North Korea has launched 31 missiles so far in 2022. There's speculation that Kim may be preparing for his first test of a nuclear device since 2017. And Starbucks is looking only at external candidates for its next CEO. That's according to interim chief executive Howard Schultz. He tells the Wall Street Journal the chain of coffee shops needs to add new talent and skills to its leadership ranks. Schultz is in his third stint running Starbucks, but says he isn't a candidate for the full-time job. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Steel and aluminum, we've decided to keep some of those tariffs because we need to protect American workers and we need to protect our steel industry. That's a matter of national security. There are other products, household goods, bicycles, etc., and it may make sense.
Gina Raimondo there, the US Secretary of Commerce on CNN. This has been building for a while now. Maybe backing away from some of the tariffs on China, given the pressure domestically when it comes to inflation. From New York City this morning, good morning to you all. Your equity market set up as follows this Monday morning. Higher by 1.13% on the S&P. On the Nasdaq 100, up by about 1.6%. Yields just a bit higher, Tom, 295.89, and crude keeps coming very close to 120, then backing away. Unchanged now, 118.86.
Right now on your gallon of gas, and the answer's higher, and as we mentioned twice this morning, the second derivative is tangible. The convexity, as it's called, the acceleration in price is real. Will Kennedy joins us with an update. Executive editor for Energy and Commodities for all of Bloomberg this morning. Will, what's different about 120 this time around versus the last time we went up to 120?
The one big difference, I think, Tom, and we discussed this a little bit last time we spoke, is there's a real lack of refining capacity in the world. And what that means is that oil's back at 120, but the prices of gasoline, diesel, jet fuel around the world, which is, after all, how people experience oil prices in their own wallets, is rising much faster. And we see new records for gasoline pump prices and diesel prices across America. There are 10 states right now where people are paying more than $5 a gallon for gasoline. So that's the big difference, is for consumers, right, it doesn't feel like for 120, it feels like something much worse.
Your coverage dovetails into policy. Is there an American or frankly global policy prescription to improve distillate refining capacity?
No, I don't think that there is in the short term. I mean, we had the CEO of Chevron last week tell us that he doesn't think a new oil refinery will be built in the US ever. There are some things refiners can do to increase their productivity, perhaps, but any new refining capacity that the world gets is going to come in Asia. So we're going to be increasingly reliant on the Middle East, on India, on China to process the world's fuels. But increasing that capacity takes a lot of investment and takes a lot of time. So there are no easy solutions here, short of some degree of demand destruction.
So given that, Will, given the fact that we're heading into driving season now, with gas prices in the United States near $5 on average across the nation, how high are people projecting that it could go out before you start to get some sort of demand destruction?
I don't think we know for sure, Lisa. One interesting thing is that there haven't been an awful lot of signs of it yet, which tells you that people are absorbing it into their budgets so far, but that could change quickly. I do think that there are reasons to worry that, as Tom said, prices are accelerating at a quicker rate. And there are reasons to worry that as we go through the driving season when demand typically peaks, that's going to coincide with the fact that China is coming back from some of the worst of the lockdowns it's seen. One of the reasons that prices of oil have remained relatively subdued over the last few months is we probably lost 1 million barrels a day of demand globally from China because of the very severe lockdown in Shanghai and elsewhere. If Shanghai is really coming back, I think the oil market over this summer could get really very hot indeed. And in that situation, prices could continue to accelerate. At what point the consumer breaks and changes their behavior radically? I don't think anyone really knows in this economy, but we may be about to find out.
Well, I've been surprised at how little the United Kingdom windfall tax has been discussed outside of Britain. Is this going to be the template for other nations as they try to raise revenues to offset some of the increasing costs for certain members of their community, while also not allowing big oil to sort of give the appearance of largesse?
Yeah, I mean, it's interesting with the UK is probably the only country to hit oil producers specifically. Of course, we have a mature, we're slightly unusual in Europe to have a mature and relatively large oil and gas industry, which is there to be taxed. We have seen other sort of windfall taxes in other European countries on utilities. In Spain, for example, they have taxed the profits of electricity companies, and that might be something that we see elsewhere. But of course, it's difficult for governments because on the other hand, they're thinking about how to encourage investment in new energy and how to make sure that people are investing in renewables or even possibly new fossil fuel energy, and taxing their profits is probably not the best way to encourage that, even though it's politically appealing and perhaps even politically justified in the current environment.
In your reporting, Will, and this goes to jet fuel and all the talk about climate, and this idea of flight shame, which I guess is rather large in Sweden, among other places. What's the trend on that into the summer and, frankly, into the autumn season? Are we feeling more guilty about traveling?
I don't think that the ordinary consumer, the ordinary vacationer is. Every indication is this is the first summer in 3 years where people will be able to travel really freely. And if we look at Europe, the aviation industry is struggling to cope. The story here is of huge delays and lines and queues at airports because people are trying to grab every available seat on an aeroplane, and security, etc., can't really cope. So there doesn't seem any flight shame whatsoever. I think in business travel, it might be a little bit different. There are reports of companies setting targets for people to travel less, asking people to travel less so they can meet their carbon commitments. But the millions of flights that people take on holidays, I don't think there are any signs of that slowing down at all.
Will Kennedy, thank you. Tom, why is the flight shame always driven by the people who fly so much?
I don't.
And often privately too.
You're
going to stay out of it?
I'm going to stay out of it.
Okay, you're going to stay out of
it. John, I look at New York, LA, and I look at New York, Paris, just as two popular metrics. New York, Paris, sort of a more recent flight in the coming weeks. 2 seats, business class, was $5,000. Then it was $9,000.
12.
Then it was $13,400.
Seen it.
And right now we're top ticking $20,000.
That's ridiculous, Tom.
2 seats, business class, not in October, into the summer.
So 2 industry groups, Tom, and they're connected to each other, and they're both being really disciplined on capacity. We're seeing the same thing happen in the oil patch. We're seeing the same thing happen with the airlines. They just won't build out capacity, Tom. And they're telling you, they're being upfront about it.
Well, honestly, how much is this the ability, and sorry to cut in here, but frankly, this is the ability to build out capacity at a time where they can't hire enough people. I mean, you're seeing this with pilots, you're seeing this with flight attendants, and frankly, in the oil patch, you're seeing the same story. They can't hire the people to actually do the work to create the production. It's not so simple for them to just simply turn a switch.
No one thinks it is, but let's rephrase that. They're not willing to pay up to get the people, because there's always a price. Now, with pilots, that's about training. And for other parts of this story, it's about training too, but let's face it, this is about not paying up at the price that would be required to build up the capacity in this economy.
Without a doubt, and especially as pricing power continues to gain, people are going to start to question that.
We flying this summer? Everyone I know is flying this summer.
Everyone's flying.
Everyone
Come on.
is.
I'm not going to flight shame anyone. It's ridiculous.
Crazy.
Up 1% on the S&P. Futures up 42. This is Bloomberg. quiet, calm start to the week. It gets busier as the week grows older. The ECB on Thursday.
Yes.
An inflation report on Friday. Your price action shaping up as follows on the S&P, on the Nasdaq. On the S&P 500, positive a little more than 1%. On the Nasdaq 100, up by 1.5. Yields up 3 basis points. Having another little look at 120 on WTI, then backing away, 118.41. Crude lower by 0.4%, Tom, in the last couple of minutes.
We're coming in. I also want to know yen, 130.75. It's a backstory for a lot of us, but weak Japanese yen is tangible. A bit confirmed with Swiss franc at a 103 euro Swissy, but I would really watch weaker yen this morning. Right now, what we're going to try to do is go to 10 Downing Street, where after the Jubilee, they've broken out of the bars and there's a little bit of protesting going on. And Lizzie, what's important here is the watch. It's like 2 p.m. there, 1 p.m., where Boris Johnson's 4 hours away from a protest vote, right?
That's exactly right. You can hear the protesters. It might just be one protester with a loudspeaker. Who knows? But they're very loud. Boris Johnson faces a vote of no confidence tonight between 6 and 8 p.m. London time. And that's because 54 of his own MPs have written to the chairman of a key committee to say that they've lost confidence in the Prime Minister. But it's not an automatic trigger that means he'll go. Oh, it's getting even louder. It's not an automatic trigger that means he'll go. Remember, his predecessor, Theresa May, won the confidence vote and lasted another 6 months. And Margaret Thatcher as well lasted another day. So we'll have to reach 180 votes for Johnson to be ousted.
Leslie, thank you so much. And, of course, stay with Bloomberg through the day and, frankly, into the New York evening as well as the Prime Minister responds to this vote. I must admit, in the British press, it's very clear he should survive this vote, but it's a huge mystery what that outcome will be. What is a huge mystery for you is the effect of these oil prices, these gasoline prices on the American consumer. Kathy Bostjancic joins us now. Kathy Bostjancic is chief U.S. financial economist at Oxford Economics. Kathy, we haven't stated the obvious, which is the strength of the consumer given housing and oil prices to come. How fragile is the American consumer?
Good morning, Tom. Happy to be with you. For right now, the consumer is quite resilient. Remarkably, we could see real consumer spending growth close to 5% in the current quarter. And that's despite higher inflation, higher gasoline, rental prices, as you pointed out, and higher interest rates. And even with sentiment sagging, right? If you look at University of Michigan, it's rock bottom. Consumer confidence, as reported by the conference report, a little bit better because 3 of the 5 questions about the labor market. And that's really the key right now for the consumer, we think, is the labor market, as we found out Friday, is still really quite strong, and that yields a lot of income, keeps consumer spending, and they have a good balance sheet, right? Strong balance sheet. We estimate they've tapped into about $120 billion of the $2.5 pandemic-related savings, so that keeps them on good footing for now. Going forward, the momentum will probably eases as we get to the end of this year into next year.
So let's talk about the momentum fading, because we do know that these jobs data that we get are a lagging indicator. We hear about companies on the margins cutting back because they overstaffed in certain areas due to the mix of spending during the pandemic. Will that lead to a negative jobs print in the next few months?
It's a great question. The headlines are really starting to pick up, but what we see is that initial jobless claims are still really low, right? Hovering around 200,000, and continuing claims are also near historic lows. So what it shows is that even if people are laid off, and if they have the right skill set, should be able to get a job rather quickly. We all know the job openings to the per unemployed, which we watch closely, that Chairman Powell talked about as being uncomfortably or unhealthily high. It's still 2 jobs available for every 1 person unemployed. So we're not too alarmed. We're not anticipating a negative print on payrolls, but it will ease and slow as we go to the second half of the year.
A lot of people were looking at the participation rate ticking up very slightly in the latest jobs report as possibly indicating a bit of slack in the labor market. Basically, people coming back into the market that could potentially loosen some of the tightness that we had been seeing. Do you agree? I mean, do you think that we're going to see a continuation of this as people realize they have to finance the higher inflation, and frankly, they see the job openings now available?
Yeah, we are seeing, particularly the prime-aged workers, so 25 to 54, that's recovered really quite nicely. And it's really the 55 and older category that's lagging behind. So those are people, most of them, or much of them, because they went into pre-retirement. But we know, as you said, inflation's picking up. It's got to be pinching them a bit. And also the equity market not as bright as it was, not a bear market, some declines. We think that encourages people to come back to the labor force as well.
And Kathy, when you hear people say things like monetary policy operates with long and variable lags, is that true?
To some degree, there is still some lags, but to your point, John, it's not as long as we once thought, and what we learned in our textbook, because it's really financial conditions that affect the economy. So things that you were talking about earlier this morning, corporate bond spreads, equity prices, the yield curve, those type of things happen and can have a very quick impact. And right now, with the markets kind of settling down and being okay with what at peace, it seems like what the Fed's doing, actually financial conditions maybe not have tightened as much as the Fed would desire.
And that's what I wanted to get to. Given where financial conditions are right now, do you think that's sufficient to slow down this economy sufficiently to bring inflation down?
The only thing that seems like we talk about the consumer, and that's the main driver of the economy. The only thing that seems to hold the consumer back is supply constraints, right? We saw, unit auto sales fall 12%, but that's because there weren't enough autos, not because of lack of demand. So, I'm afraid, the Fed's going to have to do more. And I think 50 basis points July and June. We think they scale back to 25 in September, but we'll see, right? It's really going to depend on these demand numbers and the strength of the labor market.
Kathy, when you partition the domestic economy and trade, like domestic final sales versus export and import dynamics, how bipart are those two ideas? How separated is America's domestic resiliency from trade dynamics?
Yeah, right now, domestic demand still remains quite strong. The trade sector is quite variable in the sense that it's been a big drag up until, I would say, the most recent monthly data. Then we saw some narrowing of the trade. So it can fluctuate quarter to quarter and kind of play havoc with us actually forecasting GDP, to be honest. But overall, domestic demand is strong, and we're seeing the external demand weaker, and obviously lots of challenges, I think, particularly in Europe.
Kathy, we're talking a lot about inflation, and coming off a weekend where I was on the road, I saw the gas price and I saw how much higher it was, and frankly, how much it fluctuated from gas station to gas station, which is sort of shocking, given that this used to be something where there was only a penny of difference. How much, and is there a threshold at which this becomes something much more material for the American economy?
Well, it's certainly a large drag. Earlier in the year, we did some analysis, and with the increase in gasoline and oil prices, you're seeing well over 1 percentage point drag on consumer spending. So that's quite interesting. Consumer spending would be even stronger if we didn't have this drag. But it's always hard to say what the tipping point is. But certainly, once you get to $5 on average nationally, that's a startling number, really, frankly. And we're probably going to see that during the summer. But there's so much pent-up demand. I think consumers are going to drive right through it. Though, as we go into the new year and people have released their demand to travel, different story, right? Is that pricing power going to still be there for energy companies and other businesses?
Kathy, thank you. Kathy Bosch-Jansch's there of Oxford Economics. The consumer's going to drive right through it, and then maybe things get a little trickier further down the road. The Fed is independent. That's my new line. Every time I want to blame the Fed for something, every time I'm going to say it's the Fed's fault, I'm just going to say the Fed is independent. You've heard that a lot, haven't you, Lisa, over the last few weeks? The Fed is independent.
You raised a great point, though. And how much is this sort of talking out of both sides of your mouth? If you say they can completely rely, you can completely rely on the Fed to handle inflation. And both, by the way, they're independent, but we need them to do something. And please do something.
It's better than that.
But
Here's
they're
the big
independent.
problem. Look over here, massive, massive problem. But I just want to reaffirm the Fed is independent, and they've got a job to do, and they've told us they're going to do it, and we believe in them.
In all honesty, I feel kind of bad for trying to dovetail this message because
Why?
right now, the administration doesn't have many tools to deal with inflation. You could go back, you could make an argument about the American Rescue Plan, about Build Back Better. You could make a point about whether it should have been bigger or smaller for the people who think that it's contributing a lot to inflation. How you message going forward is a lot trickier when you're dealing with supply chain disruptions, you're dealing with a war in Ukraine by Russia, when you're dealing with all of these different factors.
I spent the weekend trying to work out what Secretary Yellen thought about that package last year, didn't we?
So in this biography, it was reported that she originally was hoping that it would be more around $1.3 trillion, not $1.9 trillion, because she was concerned about inflationary pressures. Then she came out and said, no, that's not true. I've always supported this. I think that it's a great thing. It really presents a hairy, united message from the administration.
Messy, Tom, over the weekend for the former Fed chair. Messy and unfortunate as well.
Yeah, it's unfortunate. The big difference here, John, which we really haven't touched on today, is iconic Yellen is the word slack, and her ability to frame how we pick up the slack in the job economy. We've succeeded at that. Whoever you want to give credit to doesn't matter. But the now what, given what appears to be a pretty much fully employed America, to me, that's the major distinction.
Tom, I just wanted to say, the Fed is independent. Futures are up more than 1%
Thanks, John.
on the S&P.
Honestly,
in case you didn't know, that's all.
John,
in fact, I just want to reaffirm that by getting the chairman to sit next to me in front of the press, and I'll tell you all that this guy's independent.
John, do we have to
and if
stay
you've got
late
questions
for
on
the
inflation,
Boris vote?
Ask him.
No, you don't, Tom. Go on. Futures up more than 1% on the S&P. Bob Dollar Crossmark joins us as we count you down to the opening bell in the next hour on Bloomberg TV.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, Prime Minister Boris Johnson is fighting for his job. Rebel members of his Conservative Party have forced a confidence vote later today after a series of scandals. Johnson wrote to Tory lawmakers saying the vote gives the party a chance to end weeks of speculation and take the country forward. Economists at Goldman Sachs say the US economy is still on a narrow path to a soft landing. In a new report, they say that there are some signs of softening in the labor market. At the same time, sequential core inflation appears to be slowing. They say that reduces the risk the Fed will have to tighten monetary policy to a point which will force a recession. India is looking to double down on its Russian oil imports. State-owned refiners are eager to buy more heavily discounted supplies from Rosneft. International players have been turning down dealings with Moscow over its invasion of Ukraine. And shares of China's ride-hailing giant Didi are soaring in pre-market trade. According to the Wall Street Journal, Chinese regulators are preparing to wrap up their investigation of the company and restore its main apps to mobile stores. The report also says that Didi will face a relatively large fine. And JetBlue has improved its offer for Spirit Airlines. The carrier boosted a breakup provision to $350 million and added an upfront $164 million cash payment. On Friday, Spirit shareholders will vote on whether to accept a lower offer from Frontier Airlines. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We have 11 different models that we look at, but a fundamental assumption behind all of our modeling is the idea that we're going to see a material slowdown in economic growth but skirt the recession. We're taking the optimistic case here that the Fed will be able to pull this off.
Lori Calvasine, the head of U.S. equity strategy at RBC Capital Markets, like many others, tweaking, making adjustments here in the volatile, the toxic brew, Lisa Abramowicz, that is out there in the equity market. Lisa, what are you looking for in equities?
Right now, the second quarter earnings, how much there's going to be revisions downward to the earnings projections. That, to me, right now, is the biggest question mark. We have already had the rate volatility, this question of the repricing there. Now it comes really down to profits.
Helene Becker joins us now. This could be a 3-hour interview given the fixation in America on air travel as we come out of the pandemic. Deaths under 300 is a huge, huge deal. Helene, let me get out of the way. Spirit, Frontier, and JetBlue, and to borrow a phrase from CFA Level 4, Is this dinosaurs mating? Is this much ado about next to nothing?
Well, we'll see what happens. It's certainly not a done deal in any case because they need regulatory approval, and the regulatory hurdles in the current administration are pretty high. So there's no guarantee either deal gets done. Obviously, Spirit thinks they have a better proposal and really are taking to task the Spirit Airlines board of directors and management team.
No, Helene, just to get this out of the way, because Lisa's got 47 other questions that really matter. How does Spirit Frontier or JetBlue Spirit, whatever the name's going to be, how do they compete with the juggernauts like United, Delta, and American Air?
Yeah, that's a good question, Tom. And I think that's why they need to merge. I think any airline currently not named American, Delta, or United is having issues attracting and retaining people. And one of the biggest issues is retaining pilots. There were 10,000 pilots that retired in 2020 and 2021. And in order to fly the 2019 schedule, they need to hire that many. Plus, to do any growth that they were anticipating, they need to figure another 20%. So this year alone, the industry needs to hire something like 12,000 pilots. And we just don't turn out that many, number one. And number two, the whole idea, I think, behind either merger is really about giving employees, and especially pilots, more crew bases, more opportunity to fly the schedule, more opportunity to make captain, which is where you maximize your income over the life of your career.
Yeah.
And I think that's really what we're arguing about here. And I think that's why JetBlue is being so aggressive.
Attracting employees is basically the same as saying having to pay them more. Not the same, but it's definitely part and parcel of the same story. Helene, given the fact that airlines are having to pay their workers more, they're also facing much higher costs when it comes to fuel. How much pricing power do they continue to have as consumers get crimped in other areas as well?
Yeah, that's a great question, and we're wondering that ourselves. So here's how we're thinking about it. The summer is sold out. Everybody who was planning to go away in June, July, and August probably bought their tickets in April or May. And certainly airlines themselves have been sounding the alarm on higher ticket prices. There are also flight cancellations. It's really kind of a disastrous summer, I think. I think we're setting up for a really difficult summer from the perspective of operations. But I think we're worried about September and what happens in the fall, because to your point, I heard you say that gasoline prices are $5 a gallon. And we're certainly seeing it cost more and more to fill up cars, especially for those who drive. And airlines have no choice, but as labor costs go up and as fuel costs go up and airport fees are going up, they have huge inflationary pressures. They need to raise ticket prices. And at some point, the consumer is going to say, okay, we did our travel and we're just done. We cannot fly again.
But to that point, Helene, how much does business take over, given the fact that you are seeing more conferences and people are realizing that FaceTime is really important?
Yes, well, that's our I don't want to say hope is the strategy, right? But that's what we are thinking about after Labor Day. We are thinking that, okay, leisure travel, which is up about 35 or 40% from 2019 levels, starts to flatten out until the holidays. And then business travel, which to your point is increasing with more conferences, definitely more in person. There's been so much turnover at companies that you don't know who your clients are anymore. So yes, you have to get out and meet and greet. And so we're hoping that business travel definitely comes back. And then international is the other big one, right? We think international is down about 50-60% still, especially Asia Pacific, which we think will be another couple of years before it comes back because of the uncertainty with COVID. But North Atlantic is going to be good this summer, even with the U.S. still requiring testing.
Well, the testing, I want to go there. We experienced this in real time. Francis and Laquad, the Gulf Stream folks. So Lisa and I were flying, the airlines Helene Becker talks about. Why are we the only ones, Helene, with a test to get back into the country? When does that go away?
No kidding. I think it's ridiculous, right? Because you can fly to Toronto or Tijuana or Mexico City might not be
Lisa's
practical.
going to Tijuana.
Yeah, you can do
there?
that. And then you drive across the land border and you don't have to test. So how insane is that? That you cannot fly into the United States without having a pre-departure test. It's just ridiculous. And I've been wrong on this so far. I thought it would go away in March, and it didn't. I thought it by May 1st for sure it would go away. No, it's still with us. So maybe I'm done predicting when it's going away and just kind of thinking at some point the U.S. has to examine what it is doing and remove that pre-departure testing.
Elaine Becker, thank you so much. Greatly appreciate it. With Cowan always here on Sprint Frontier JetBlue. Lisa, I was shocked how hard it was to get a simple antigen test in London because all the places have shut down.
That's a great point. I found one early before we left, and it was definitely a bit of a scramble. You raise a good point, though, right? It seems almost arbitrary where you end up having to test and where you don't have to test. How much would it actually open the window to more people coming in or reduce some of the frictions versus, remember when we used to talk about the comfort that that consumers would feel knowing everybody had tested negative?
Lisa, we have to blow up the show. We have to just completely blow up Bloomberg surveillance this morning in our last 3 minutes. Elon Musk reiterates request to Twitter for more information on spam.
Okay.
Spam has done a really good job on Twitter. They do better on Instagram. But what's really important is plain spam does better than spam with pineapple.
Okay. Aside from your culinary preferences for spam, Tang and Velveeta, I'm looking right now at Twitter shares that are dropping pretty significantly on this headline, down about 5%, just ahead of the open, now down below $38 a share. Basically, Tom, isn't this just telling us the deal is off in any way, shape, or form?
I'm not willing.
For 54.20. Where is that? We're far way off.
I got a negative 6% right now on Twitter. John Farrow, The Open, Bloomberg TV. He's blowing up the show as we speak. Stay with us on this eventful Monday. This is Bloomberg.